Director. I know we're a couple of minutes off the start time, but it appears I was thinking the superintendent might be here, and she is on Zoom. So good to see you this morning, Madam Superintendent. It appears for the record that we have a full quorum. So with that, Madam Director, how should we begin?
Mr. Chairman, good morning. We would recommend that the board first convene as the State Loan and Investment Board and consider approval of the minutes from the October 7th, 2021 State Loan and Investment Board meeting and the November 4th, 2021 State Loan and Investment Board special meeting.
Thank you, Madam Director. With that, I would entertain motions.
Mr. Chairman.
Yes, Mr. Secretary.
Mr. Chairman, I would move adoption of the October 7th, 2021 State Loan Investment Board meeting minutes, as well as the November 4th, 2021 State Loan Investment Board special meeting minutes.
Thank you, Mr. Secretary. Is there a second?
Second.
It's been seconded by the auditor. Is there any question? If not, any comment? Hearing none, all in favor signify by saying aye. And I see the superintendent has a thumbs up. So
Aye.
That motion carries.
Thank you, Mr. Chairman. We have provided the board with the usual reports again behind tab B. We have nothing further to add to those reports at this time, but we would stand for any questions from the board members.
Thank you, Madam Director. Any questions from the board on the matters behind tab B? Seeing none. Proceed.
Mr. Chairman, we provided the materials for this meeting in advance and have briefed each of the board members individually. At this time, I'm prepared to propose a consent list if the board would so desire.
Without objection, please present your consent list proposed.
Mr. Chairman, the following items appear to be amenable for treatment on a consent list. They are F1, I1, and J1.
Members of the committee, you've heard the director's recommendation. Is there a motion?
Mr. Chairman,
Yes,
I would
Madam Auditor.
pose a consent list of items F1, I1, and J1.
Thank you, Madam Auditor. Is there support? It's been seconded by the secretary. All in favor signify by saying aye.
Aye.
We have a consent list. I would entertain a motion to adopt the director's recommendations for the matters that are on the consent list.
So moved, Mr. Chairman.
Moved by the auditor. Is there support?
Second.
It's been seconded by the secretary. All in favor signify by saying aye.
Aye.
That matter carries. Thank you.
Thank you, Mr. Chairman. That brings us to the D matters, which are the state investment matters. I would yield the floor to the treasurer's office.
Thank you, Madam Director. Mr. Treasurer.
Thank you, Mr. Chairman. The first in the D list, D1, state investment policy amendments. We have from RVK Josh Keevan and from our office Patrick Fleming, and they can go over the matters in D1. Josh, Patrick.
Thank you, Mr. Keevan. Mr. Fleming.
Thank you, Mr. Chairman, members of the board. It's great to be here and see you in person. I'm going to speak to the memo that we've prepared that summarizes the investment policy edits that are being recommended. First I'd like to say policy changes outside of the normal once a year process to review this is generally something we do work really hard to try to avoid. And so I apologize that we are doing this at this meeting. There are a couple of cases, though, where there's some unique circumstances where we do think it raises to the level of importance that it's better to make a couple of changes now, and I'll get into the details of what those are. The first in section 20 is with regard to the benchmark for infrastructure. As you may recall infrastructure is a new investment asset class in the portfolios. It was, you have not actually yet invested any dollars in infrastructure, but you have selected your first manager with the Macquarie Core Open End Fund. And Macquarie is likely to call their first slug of capital from you in the first quarter. And when we added infrastructure to the portfolio, we did try to caution a little bit about the poor availability of good benchmarks in this asset class. And that as we learned more about the type and nature of infrastructure investments that you would be making, we may want to make sure that we have an appropriate benchmark, which may require a change to the benchmark. And that's where we are today. The placeholder we've had has been the MSCI Global Quarterly Infrastructure Asset Index. It's probably one of the closest indexes to what we would like to see eventually, meaning that it is a peer group benchmark. So it's an aggregation of other large investors and how they are doing in infrastructure. When you look at the composition of it, though, it suffers from a couple of issues that make it a poor benchmark for the lower risk, more consistent income focused investments like the Macquarie strategy. It's generally a higher risk composition of assets. It has more assets that are that are in the GDP sensitive category, meaning they're going to go up and down more with economic growth. And it's also got a 90% non-US, basically 90% between Australia and the UK, and that's not at all what your portfolio is going to look like. So that brings us back to some of the other common choices, which tend to be either inflation plus a premium or some other reference rate plus a premium that reflects more the characteristics of what you hope to get out of the asset class. And in discussion with the IFC on this, there was a desire to have something that reflected the fact that in many ways, this is a substitute for fixed income. You know, it's not a pure substitute for fixed income because it has more and different risks, but it's intended to be a consistent income provider, much like fixed income. And so the recommended benchmark that we've put forward in these investment policy edits and have discussed with the IFC and has been approved by the IFC is a 10-year treasury yield plus 3.5%. Now it's important to note that that is not 10-year treasury returns plus 3.5%. It's whatever the yield is. So every quarter, whatever the yield is on 10-year treasuries plus 3.5% annualized. So as inflation goes up, we expect that there should be some correlation to treasury yields. And so this from our perspective is a good match in terms of the objectives and the risk profile of your infrastructure portfolio. The second is related to Appendix J, which is the sub-policy for the Legislative Stabilization Reserve account. And it's really a bit of a technical fix that will allow the Treasurer's Office to manage the allocations to the different portions of the LISRA based on projected cash flows. And there's three subcomponents to LISRA in the investment policy. There's a short-term reserve that is 100% invested in low duration fixed income today. There's an intermediate term reserve that is 100% core fixed income. And there's a long-term reserve that's a diversified pool of riskier assets. Wyoming Statute 94715Q requires a minimum of $500 million in short-term fixed income investment grade securities. And currently that's satisfied by the roughly $500 million that is in the short-term reserve of the LISRA. The policy change is to amend the language in the policy to, instead of say that the short-term reserve must be 100% low duration fixed income, because that means something very specific in your investment policy, to allow it to be both low duration fixed income and cash equivalents, essentially. So that'll allow the Treasurer's Office, as they have expected increased liquidity needs from LISRA, to increase the size of that pool and to invest it in a mix of short-term investment grade securities consistent with the statute that is the best tenor match for the expected cash flows. The last change is really something that we've actually discussed already, which is in the effort to streamline the policy a bit. We've removed the glossary of terms and index definitions, though they are available as an annex to the policy on the state treasurer's website. And I believe there was some discussion as well about adding some language in the policy, at least to point readers to where that can be found on the state treasurer's website. So, Mr. Chairman, those are the policy edits that we would recommend to the board. I would stand for any questions.
Thank you, Mr. Keevan. Yeah, I think that latter point I had asked that we insert into perhaps the introduction, just a notice of where glossary of terms and indices could be found, just from the point of view of if a citizen wants to pick this up and read it, they know where to go get the other information. I note that that's on there. I don't know if we have any specific language, but I will also note that we will be doing our annual review probably for June.
Yes, sir, Mr. Chairman, most likely in the April to June timeframe.
Okay. The other question I guess I had, Mr. Keevan or Mr. Fleming or Mr. Treasurer, for that matter, I certainly understand the reason for the changing of the index to the 10-year Treasury. I had that right in front of me, plus what, 4? Is that right?
350, Mr. Chairman.
Okay. The only thing I wanted somebody to address is if our infrastructure fund isn't investing in anything that other infrastructure funds are investing in, is that the right investment in infrastructure? I think it's a pretty easy case to be made that performance will be alike.
Mr. Chairman, the issue with the MSCI index is not that it represents what other infrastructure investors are doing. It represents what a small subset of other infrastructure investors are doing. And that small subset is investing, they're largely non-US investors. And so they have like, as I mentioned, the 90% exposure to Australia and the UK. I am actually hopeful that at some point this index, as they continue to develop it and get more participants in it, that we may be able to actually come back to that index as a better representation of the sort of global returns of institutional investors in infrastructure.
Thanks.
Mr. Chairman?
Yes. Mr.
Yes,
Fleming.
Patrick Fleming, CIO from Treasurer's Office. One point that I would like to make on the proposed index change is this is not an index that either Robin Preston or myself would be happy with. It's one of the best of a bad lot. But I do just want to tell you that at some point, because the index is only going to be positive, that at some point when we present our performance, we will be having a major underperformance because the index is always positive, where our fund at some point will go down, and there will be a big disparity between the two. So I'm just forewarning you that when we have that underperformance, it's because of the index and not because of the relationship, or shouldn't be because of the relationship of other funds.
And Mr. Fleming, I think you raised a good point. It's this index that, just because of the nature of the 10-year treasuries and all that, that will be consistently challenged. Well, not consistently, but at some point will be challenging.
Yes, Mr. Chairman. So 10-year treasuries would have to be at a negative 350 basis points for us to be zero for the benchmark, much less a negative return on the index.
Right.
So as we know, after the great financial crisis, for instance, the infrastructure funds were down significantly. And so the underperformance in that instance would be quite large.
Yeah. Mr. Treasurer, any comments?
No, but I think this kind of represents the what our goals are. Maybe the average, if you had a if you had a MSCI that represented an all-world infrastructure thing and a 5-year rolling average or something, this is probably something in the neighborhood of what that would be. But you know, I certainly agree with Patrick that we are going to have some times when it looks like, why are we so far off? And it's just because it's always positive. So I guess we have a positive outlook on infrastructure, Mr. Chairman.
Thank you, Mr. Treasurer. Secretary has a question. Mr. Secretary.
Thank you, Mr. Chairman. And this is just to dig down a little bit deeper to understand the MSCI in saying that it's geared towards higher risk. And then I see 90% is Australia and Europe. And we've talked a lot about emerging markets and that being higher risk. I don't usually think of perhaps Australia and Europe being an emerging market. Can you tell us a little bit about that subset that makes it a riskier index?
Mr. Chairman, Secretary Buchanan, it's primarily the currency risk with those markets. And you will have some currency risk in your portfolio. In fact, you may recall with Macquarie, there are 2 seed assets that they're starting with. One is a U.S. utility, but the other is an Italian toll road where you will have currency risk to the euro. I believe over time, the goal will be to mitigate currency risk in your infrastructure portfolio, because this is really a asset class where you want consistent, positive, income-based, contractual cash flow returns, not a bunch of currency risk on top of it.
Thank you, Mr. Secretary. Questions, Auditor, Madam Superintendent, any questions? Well, thank you. Thank you very much for that presentation and for the diligence on this issue. What's the pleasure of the board?
Mr. Chairman, may I make a motion on the treasurer's recommendations?
Absolutely.
The state treasurer recommends that the board approve the proposed changes to the state loan and investment board's master investment policy and sub-policies as approved by the investment funds committee.
Thank you, Mr. Treasurer. Is there support for the motion? It's been seconded by the auditor. Is there any further discussion? Hearing none, all in favor signify by saying aye or raising a thumb. I see that's unanimous. Thank you. Next matter.
Mr. Chairman, this is informational only, and we'll turn it back over to Mr. Keevan and CIO Fleming, and this has to do with the quarterly performance and peer data.
Thank you, Mr. Treasurer. Mr. Keevan.
Mr. Chairman, thank you. I have 2 pieces of information I'd like to cover with you this morning. One is a fairly preliminary summary of the performance through September 30th. So that represents the first fiscal quarter for the funds. And then we've also updated our annual survey of what is, from our perspective, the best peer group for the permanent mineral and common school funds, which is a collection of other U.S. state-based permanent funds. And if you want to turn to page 2 of the, it's Slib page 3, I believe, our page 2 of the 930 report. Just a quick update on market returns. And on the left-hand side of the page, you have year by year, sort of stacked top to bottom, best returning asset class to worst returning asset class. And calendar year to date on the far right, as of 9/21, that's where we stand, calendar year to date as of 9/30. And it's always just, I think, instructive to sort of look at this and say, okay, what's doing really well this year? What's not doing really well? One of the things I always look at is, well, where is cash? If cash is lower on the order, that means we're probably having a pretty good year. And cash is third from the bottom. So as you can see, lots of positive and very positive returns. Up at the top, MLPs, 38% return from MLPs. So your portfolios have definitely benefited this year from that exposure. You've got private equity, US equity, real estate. So large cap US continues to do very well. And the other things that you see at the top of the list are really kind of real asset inflation related, which makes sense given some of the inflation dynamics that we're starting to see. Down at the bottom, you see mostly fixed income, and that also makes sense. You've got emerging debt and US debt are the two below cash. We have seen rates come up a little bit this year. And then in the case of the emerging debt, a strong dollar has been a bit of a challenge there this year. To the right of that, we've got some Sharpe ratio analysis that I know Patrick had maybe a few comments he wanted to make on that. Would you like to make those now?
Yes, thank you, Josh. Mr. Chairman, this is something that I'd requested for IVK to input. So going forward, we'll be able to see this. But when we talk about our number one objective is the highest risk adjusted return, I think it's quite important to be able to look at not only the historical returns and the Sharpe ratios, but also what are the forecasted returns and the Sharpe ratios. So just as a refresher on the Sharpe ratio, it's a measure of what the risk or volatility adjusted return would be. So in overall, you would look at the return divided by the volatility of the fund. And so if you look on the right, far right of the presentation, you see the S&P 500 large cap. And over the last 15 years, you've had this 10.4% return with a Sharpe ratio of 0.66. But the key that I want to point out is what about the next 10 years? And these are using RVK's forecasted returns. So every year, these will be updated. But the forecasted Sharpe ratio is 0.21. So if you go down the list, there's not one asset class that has an improved Sharpe ratio. And in fact, some of them are markedly worse. So for instance, the private equity, we had a historical 1.12 Sharpe ratio, and yet the forecasted Sharpe ratio of 0.23. Another one that really stands out is the core bond funds that had a 0.93 Sharpe ratio and the forecasted Sharpe ratio of 0.08. So when we went through the asset allocation, we were saying, okay, where is the best risk adjusted return? And that was one of the reasons why we reduced our fixed income exposure, because the forecasted return, and we increased, for instance, international equity. And if you look at the international equity, it's actually the best of all of them, where the Sharpe ratio is the same, it's flat versus the last 15 years. And many times, and just as a side note, in the almost 40 years of doing this, this is by far the worst risk adjusted return of all the asset classes that I've ever seen. So, if these come through, we're in for a period of, higher volatility, lower returns, which is problematic from our perspective. But in general, people would say, oh, well, what do you do? Why not go to cash? Look at the cash Sharpe ratio. And I don't think I've ever seen this before, where it has a 0 forecasted Sharpe ratio for cash. So just to point out, and we've been talking about this obviously for many years, but this is, you can quantifiably look at a risk adjusted return, which is obviously our number one focus on, and show that that over the next 10 years, it is going to be a much more challenging environment for the investment staff and office.
So Mr. Fleming, just for a point of reference, for those who may not, 0 is bad. 1 is pretty good. Is that
Yes,
kinda
Mr.
where we
Chairman.
wanna
Yes,
be?
I should have pointed that out, but yes, historically, a 1 Sharpe ratio is kind of what your target would be. And now when you're looking at it, 0.25 is pretty good. So that shows you how bad the risk adjusted returns have fallen.
Mr. Secretary?
Thank you, Mr. Chairman. So the Fed had recently said that the inflationary pressure is not transitory. How much of that is in the forecasted Sharpe ratio, or could these numbers actually be worse than they appear here?
Mr. Chairman, Secretary Buchanan. Earlier this week, the change in the commentary from Fed Chairman Powell was a significant turn of events from our perspective. It is the first time since we've had the coronavirus pandemic that you've actually got rising virus concern with the new variant, and the policy response has not been easier policy. You have rising virus risk and concern, a lot of uncertainty, sure, but at the same time, you've now got the Chairman of the Federal Reserve actually saying that the path of inflation is not good and it may require us to alter the course of policy. And these low Sharpe ratios are a function of very high asset prices. So, the easy money policy that has followed the last 3 recessions with greater speed and greater volume has been really successful at driving asset prices higher. And when asset prices are high, future returns are low. And that's what's driving these very low Sharpe ratios. And if you think about that and you take away the easy policy response that we've become so accustomed to that has driven these asset prices higher, that may be the right course for the economy, but it can be very challenging for asset prices. And so I think that's something that we should not be surprised by when we see it.
Mr. Chairman, a follow-up. One other point on this, part of the volatility is now that the Fed has announced that they're starting to taper, they have added an unbelievable amount of liquidity into the system to where bond yields are over 1% negative real rate of return, which is unprecedented in the total history of the bond market to have that type of a negative return. So what that means is over a 10-year period, if you buy a bond, you're going to get 90 cents on the dollar back at those type of levels on a inflation adjusted basis. So now we have the Fed who has announced that they're going to start tapering 15 billion a month. So instead of 120 billion of bonds that they're buying, now it's going to be 105, and they'll just continue to go down to 90 to 65, so forth. But they still have almost 9 trillion, 8.5 trillion on their balance sheet. So that is double of what it was after the last crisis that we had. So as the Fed withdraws the liquidity, historically, that has been associated with a much higher volatility when rates go up. And so the Fed now has forecasted, or the market is forecasting, that the first hike will be in July of 2022 and the next one will be in December of 2022. So as these rate hikes are moved into an earlier phase, that is part of where the volatility that goes into Sharpe ratios as well is forecasted to increase. So as the uncertainty of what happens with the Fed, what happens with the inflation, as you mentioned, we're 6.2% year over year CPI, which is one of the highest that we've seen in ages. So we have all of these uncertainties which go into these forecasts as well, but also the negative return on bonds is a factor that RBK looks at and says, well, this is a very problematic asset class when you have inflation at 6.2% and a bond yield at or 10-year treasury yield at sub 1.5%. So it's very, very problematic on an ongoing basis. And we've seen what's happened historically when the Fed has started to hike. If you remember in May of 2013, when what they called the taper tantrum, when Fed Chairman Bernanke started to taper, and what happened to the global markets. So I would assume that we'll have similar type of instances where we already had 2 major blowups in the China Evergrande and the Archegos fund without even raising. So we've seen this leverage and liquidity problem in the system. So I would be shocked if we do not see other instances of problems as the Fed starts to remove its accommodation.
Follow up. No, thanks. I remember Bernanke saying and Yellen parroting we have the tools to fix this. So inflation's not a problem. So, it'll be interesting. I think, Mr. Treasurer, you and I remember when interest rates were up in the 18% range. Yeah. Well, and if anything, yesterday's news was probably an indication of how volatile things can be as well. Thank you. Further questions, further comments? Hearing none. Please proceed.
Okay, thank you, Mr. Chairman. Just very briefly and at a high level on slip page 5, total fund performance, and the bar graph in the bottom of the page represents the performance of each asset class, with your performance in that asset class on top is the darker green line, and the benchmark for that asset class right directly below that as the lighter green line. And you can see the quarter was pretty mixed. You had from some of the major asset classes, fixed income was flat. Large cap US equities had a small positive return. You had bigger losses in riskier parts of the equity market, so small companies, emerging markets equities. And the best performance came from the inflation-related asset classes. So core real estate was up 6%, for example. Bank loans, which are floating rate instruments, were up 1%. So overall pretty mixed bags. We're seeing a lot of institutional investor returns that range from -1 on the sort of equity heavy endowment type portfolios to plus 0.5% is generally the sort of the upper range of what we're typically seeing. And your total fund was, it was positive. It was up about 20 basis points, and you are net of fees continuing to see consistent alpha relative to your policy benchmarks. And over the past year at 12.9%, that's about 10 basis points ahead. In a couple of recent meetings, we've talked about some of the areas where you maybe have some more conservatively oriented managers, such as in small cap or hedge funds. And I would point out that even though it's a small sample size, it is encouraging to see that those areas are actually performing better in this environment, as we would hope they would. Small cap, you can see in the quarter, the benchmark was down over 4. You were only down a little over 2. And within hedge funds, their index was up 78 basis points. You were positive 160, which is really a great quarter for your hedge fund portfolio. You can see some more of the detail on pages 5 and 6, just breaking that out into the returns of the long-term oriented permanent funds, the income-oriented permanent funds, workers' compensation, LISRA, Pool A, and state agency pool. They generally, on a calendar year-to-date basis, fall in rank order. The higher the risk in the portfolios, the higher the returns have been. 9.4 for PMTF. I would note, and I know I've commented on this a few times in the past, but Common School with its more income-focused asset allocation. And if you prioritize income as a component of return, that means you tend to have less in growth assets where more of the returns coming from appreciation. And so you are seeing a growing gap in the returns of those portfolios. It's pretty wide actually over the past year, 20% for PMTF and just over 14 for Common School Permanent Land Fund. And I know that Senate File 121 is an ongoing discussion that is really aimed at removing that income-focused mechanism that drives that devotion to income in these funds and really frees them up to be managed more on a total return basis. I do have a few comments I wanted to get to in the peer data, but before I move to that, Mr. Chairman, I'll stop there and stand for questions on the September data.
Thank you for that, Josh. I mean, it's clearly a policy issue this board has within its purview to say, let's just move it from income focus to total return. So perhaps that's something for the next meeting, but I'd love to understand what the consequences to funding for education would be. From an investor's standpoint, certainly total return makes sense. But if you're a person dependent on income, that would have a consequence. So if there's a way, if this board sees that to be a purpose, we can preempt 121, which would have to go through the session, but that is clearly within the purview of this board. And maybe the IFC has made that recommendation to us.
Mr. Chairman, to my knowledge, they have not made that recommendation, but we would certainly be happy to engage this board as well as the IFC in that discussion. You're correct. It's the asset allocation is the policy of this board.
Because I guess my sense on that matter is this used to be permanent funds, non-permanent funds. So clearly from an asset allocation point, if we just make the decision that we want to make everything just run like a permanent fund, we can go back to what we used to do, if that makes sense.
Mr. Chairman, you would want to understand the implications or possible implications of the way the spending policy and the guarantees around that for the Common School Permanent Land Fund. Could envision a scenario where if you didn't have enough income producing assets for those funds, we've got a guaranteed spending policy amount. If you had a down market where you didn't have realized gains to capture, and the reserve accounts, the way they're structured, are about a year and a half of spending. If you had a prolonged downturn, you could pretty easily envision a scenario where that just doesn't work. I'm not exactly sure what happens in that scenario where, but you do have the possibility of something that's guaranteed that the portfolio can't actually.
Yeah. Well, and I think that's worth doing because I think as an academic exercise, it's really easy to make the argument total return. That's the way we should run everything. And that's very appealing because it's all about returns. But in terms of consequences, real world types of things, it might make sense to at least flesh that out a little bit.
Yep. Mr. Chairman, may I?
Yeah.
Yeah,
Please,
just
Mr. Treasurer.
just kind of as the kind of bring the Slib board up to speed as far as some of the discussions on this is, and really I think the IFC wants to go to total return. I know I do. I know Patrick and his team does. We want to simplify those things, but we have to look at it to make sure that we can guarantee the spending policy. We need to have a reserve built up, and there's a couple of ways to do it. We've got a lot of, I guess I would say, you can do it by definition as far as the difference between your corpus and the market value, and by definition say that is the reserve. So there's a way to do that. The kind of the I guess the reluctance for us to as from the treasurer's office, and I think not speaking for Patrick, but I think kind of his same type of reluctance is knowing that if you allow that definition to occur so you can make your spending policy, there's a propensity from time to time for the legislature to get creative and reach into what they consider a pot of money and then basically make all your efforts null and void because they spent that down on a special project or something. So from my perspective, if we go down those routes, I'd really like to see a constitutional amendment that protects that process, that makes sure that the corpus is inviolate, and that the reserve, has the capacity to be stable and resilient. And so those are some of the challenges that we face. And it's not that we don't trust the future legislators implicitly, but we understand the the process and don't want to give them I guess, a method to make things worse.
And I appreciate that, but I guess every journey begins with the first step. So
Yeah. Well, there's a lot of opportunity cost right now.
sure.
Yep.
Yep. So why don't we look at that? I think that the difference really here is you would never do this if a person was close to the end of their savings, et cetera, et cetera. But if you're a young buck that has lots of risk that you can take, and hopefully we're a young buck. This is the difference between if I'm 70 and saying, how am I going to invest my portfolio? And if I'm 20 and I'm going to figure out how to invest my portfolio, I'm going to take a lot more risk and get a lot more return if I'm 20, because I know if I lose my butt in the process, we'll figure it out. But if you're 70 and depending on that income, and that's really, I think, the issue for the schools. And so with schools being a problem that they are for funding, perhaps it's a good time to get the legislature off their rear end too.
Mr. Chairman, if you think about the objectives of the permanent funds that really relate to intergenerational equity, it's a balance of risk and return. It's a stability element to provide for current spending needs, but enough growth to also provide for inflation adjusted equal spending in the future for many future generations. And so the objectives of the two funds are almost identical. And so there really is no investment reason to invest them differently.
Yeah.
It's really a bit of an artificial constraint that's been placed on the funds. It goes all the way back to Wyoming's active admission and the way that describes only income shall be distributed. But we will take that up and begin a discussion with the IFC on this issue.
Yeah. Yeah. Well, and I think it makes sense. I was the person who recommended that we go to the income focus for the Fed education, just because I wanted to make sure we had funding for education. But if we're really just interested in returns and growth on the corpus, then I think we should abandon that and figure out how to fund education otherwise. So, okay. Well, yeah. Good. Okay.
Thanks. Mr. Chairman, I'll go ahead and now turn to the peer survey, and I'll start on page 57, Slib page 57. And that's just a list of the peer funds. And you can see the names of these funds. They are all U.S. state, either land grant funds such as the Common School Fund or severance tax funds such as the Permanent Mineral Trust Fund. You can see on Slib page 58, they all share that same intergenerational equity objective that I just described. And they all have as a source of funding some natural resource as a primary source of funding. So now what makes it tricky as a peer group is each state has its own unique set of circumstances as it relates to constitutional provisions, such as the income focus that we have for some of your funds. Some states have removed that provision from their constitution. Some states have statutory limits on how much these funds can be invested in equities, as Wyoming does and has at different levels over the years. So there are many differences, but there are some commonality here that we think makes this a pretty good peer group to at least understand. Looking at the asset allocation, we start with a simple view of asset allocation on page 8. And this is just ranking them from most conservative to least conservative from left to right, using a very simple measure of what percentage of the portfolio is in public fixed income and cash equivalents. Montana on the far left, their trust funds are not allowed to invest in equities. So that's why you see such a high level there. You can see for the two Wyoming funds, PMTF and Common School, the dark blue is where you're at currently, but the light blue farther to the right is the newly approved targets that you will be slowly and methodically transitioning to over the next several years, as we've discussed. So that gives you a sense that even though both funds remain today farther on the left-hand side of the page, there is a plan to move them farther to the right on this page. And then on page 9, this gets a little bit more granular in terms of looking at, this basically takes the prior page and reverses the order. So the lower risk assets on the right, higher risk assets on the left, and gives you a sense of the composition of those non-fixed income assets. And again, we've shown Wyoming's funds, both where you're at currently, which would be farther to the right on the page, but also where the new targets are farther to the left. And the targets we've shaded a little bit lighter color, so you can really kind of see where those new targets would land on the spectrum. And one thing I think is worth pointing out is even though PMTF is over here on the left-hand side of the page with the Texas Permanent School Fund, the New Mexico Severance Tax Fund, the Alaska Permanent Fund, the green is public equities, the rest is alternatives. And so of those funds on the left, you have the most diversification of your risk assets in terms of much lower public equity exposure and more real estate, more other types of real assets, hedge funds, private equity you have, but also the lowest of the funds on the left-hand side of this page, and one of the newer additions, private credit. We go to page, let's just go to Slib page 65 next, just to give you the return data. And a little bit of good news here. We've been presenting this analysis to you for about 5 or 6 years now. And it's been, for the most part, a period of time where the more risk you had in the portfolio, the better the returns were. And having a more conservative portfolio, generally we would find your returns on the right-hand side of this page. And that's still true as you look over the past 10 years. But for the first time, we have a 1 year and a 3 year now for the PMTF, as the changes that you've approved and have been implemented by the treasurer's staff have really benefited the returns of particularly the PMTF. You can see right at median over the 1 year ended June 30, and right at median as well over the past 3 years, with right at about a 10% annualized return. So those are the high level points that I would make, Mr. Chairman. I'd gladly answer any questions that the board has.
Questions for the board, Mr. Treasurer.
Well, Mr. Chairman, and this is something that Patrick brings up a lot, and he can speak to it a little more if he wants to, but that we've implemented those, and Josh did talk about the diversity, but in the way that we've implemented that, our risk hasn't gone up that much. I mean, we're getting a really good risk-adjusted return, and that's I think really due with a lot of conversations with RVK, with our investment team, the Treasurer's Office, and the IFC, and frankly the Slib board, as far as what we're putting into it, making sure the diversity is there, and public equity has a lot more volatility than some of these other asset classes that we're putting on, and it's not a simple task. I think we've got the 65 managers now, Patrick. I'm trying to remember, but we've had to onboard a lot of different managers and different asset classes to get that, and thanks, I think, Mr. Chairman, to the board's willingness to be flexible when we have to do managers. You've been very accommodative, and we really do appreciate that.
Good. Further questions? Josh, thanks. Just to reiterate, let's take a good look at that. Let's try to get some numbers so that, because we can do that. I think, Madam Director, we are slated to have the next Slib meeting February 3rd, which will be in before the legislative session starts. I've presented my budget. It has recommendations on the LISRA and other funds, and perhaps a preemptive action by this board to just adopt a total return strategy across the spectrum of all of our. Would you do that for all of our permanent funds, or, and I guess by that, you have a cultural resource, you have some of those that are in the pool A. Would that also be the case for pool A?
Mr. Chairman, I think it's worth looking into. As you know, many of the trust funds have different income needs as well. And that was one of the reasons that we started the go slow basis when you were treasurer at that time, is because of some of those needs, the income needs. So we would have to look at those various funds individually to see whether we could do it for the entire pool A fund.
Okay. And I think a lot of this is dependent, if I understand correctly, Mr. Treasurer, on the redefining income to include, which I think we've tried to do in the policy, but there's statutory issues here about whether capital gains are considered income. The problem the state has is that we tend to think of capital gains as income when we can spend them, and we tend to think of them as fixed when we can't, when they're losses, and capital gains can be losses. And my problem has been that sort of a one-way valve that can reduce our corpus, and that's a policy implication that this state has not really come to rest on. But
Well, Mr. Chairman, I think that the way that you address that is that you link your spending policy to a percentage of your reserve. So let's say, for example, in the permanent mineral trust fund, you've got $2 billion that would be in unrealized capital gains, and so you put a percentage of that reserve, and that adds to your spending policy with your normal income, and it won't go over what that spending policy is. And that way you never spend into your corpus if you're always spending a percentage. If you have a market downturn, well, and you're underneath the water like we were, a few back in 2009 in those areas. And the first, the Joe Meyer rule came in that essentially you don't ever spend into your corpus because there's nothing to spend if you link it to a percentage of that. And then you also have to couple that with basically, if you do go and have a deficit in the costs of the cost basis, you have to have a way to pay that back over a period of time, and that has to be expressed. But the problem that we have, if you don't have that percentage of the reserve locked in a constitutional area, that's as good as a majority vote on the budget.
Yep. All right. Thanks.
Thank you, Mr. Chairman.
Next matter. Your microphone.
Okay, so I'll repeat that. The next matter is D3, hiring a private equity investment manager, Excel KKR, and it's the Growth Capital 4 Fund. And we have CIO Patrick Fleming, and our subject matter expert in this is Matt Schmagosh. And Matt will take us through the the investment manager attributes.
Mr. Chairman, Mr. Treasurer, thank you. I think this is a very good segue into our previous conversation. And the reason that I wanted to highlight the private equity Sharpe ratio difference is to comment on things that we were doing internally. And this is exactly what the treasurer talked about, that when we look at these numbers, they're on an overall asset class. And one of the things that I think Matt has done a fabulous job is finding different PE managers that have a much lower risk profile than the overall index. You know, obviously we could do VC and some other very volatile sectors of the private markets. But what Matt is doing is looking for top tier managers that are not really going over their skis, because the majority of these managers could raise as much money as they want. And so Matt has spent a long time working with these and showing that the state of Wyoming wants to be a long-term partner with these funds. We're not hot money, we're long-term. This is a asset class that we're growing into at a slow in a conservative way. And so Matt has done a fabulous job in finding these managers. The issue that we're having now is getting allocations to some of these wonderful managers, because you know, they're so well sought after. So with that, I'd like to pass this over to Matt and have him comment on the fund and introduce our prospective manager. Matt.
Mr. Chairman, members of the board, I'm Matt Spingash, the Senior Investment Officer over Alternatives for WSTO, and I wanted to discuss our recommendation of Excel KKR Growth Fund 4. What I find when we were talking about private equity earlier, one of the things I want to make a remark about is the desire for an asymmetric return. And when you look at the 5 ways to make money in private equity, and you're talking about growth, multiple expansion, financial engineering, operating improvements, and tuck-in M&A at a lower price than platform or exit, the thing that I find the most compelling about these things is when you're seeing multiple expansion at its highest has ever been, people buying very expensive things. You're looking at, you know, revenue, operating profits for public companies and for private companies are so high just simply because the cost of capitals are so low. You're looking and saying, you're looking for people that are still prudent, still doing the right things, and also put enough structure underneath their deals so that when we put $1 in, we know that even in some sort of calamity, they should probably get $1 back. I find that to be very reassuring in a world where there's about 800 tech unicorns and only a small handful of them are actually profitable. So looking for that profitability, that revenue growth, and Excel KKR also excels at that in the middle market software business and technology enabled services. I want to introduce Greg Williams and Tom Barnes from Excel KKR Growth.
Hi, it's Greg Williams here. Thanks everyone for the opportunity to present. And Tom may join me here in a minute. I have to apologize. We're both at an annual company offsite today. So we had a little bit of a schedule conflict, and he's wrapping up a presentation to our entire firm there. But I will start, and again, happy to be in front of this audience. And I would just, dovetail on Matt's comments there. I think we have some slides to go through, but just as an introductory comment, most of our firm, and certainly myself and Tom, have seen technology downturns in the past. We've seen them in 2000, 2001, and we've seen them in 2008. And I think we're very sober about places in the cycle that we may be in, and understanding that it's not always going to be roses. And so we try to really address the style of investing that we do to be able to target parts of the market and the way that we invest in the securities that we invest in, the attributes that we focus on, to be able to weather the storm in downturns. So Matt, I think everyone has got the slides that we sent you all before. Is that correct?
Yes, that is.
Okay, great. So I'm on slide 2. This is just Excel KKR growth by the numbers. Again, I won't spend too much time on any one of these slides. Just recognize we have limited time and leaving some time for Q&A. But the top row on slide 2 just kind of gives the statistics on net realized MOI and IRR in our distributed capital ratios, which we're very pleased to deliver those to our investors over time. What helps us get there is really the second row of numbers, and something I was just kind of referring to. I think relative to our peers, we spend a lot of time, and I'll get to another slide on this, and trying to minimize left tail risk. Part of the way that we do that is by the depth and the capital structure that we're in. So as growth investors, we're investing, we have a minority stake in a business, but we try to be senior in that capital structure such that if there's any degradation in enterprise value, we have cushion to our investment there, and we'll still be able to get out with 100% of our capital or more, even in scenarios that are not as rosy as we might have otherwise predicted at the start. We also spend a lot of time on governance, and that's here in the second row too, as we refer to senior or investor-controlled investments. So we'll get more into that in a bit, but it's a way to provide terms in our investments that let us step in to have more influence and or control on investment if for some reason the management team is having trouble guiding the business to good performance. What that's translated to, and what Matt referred to earlier, is we have really no examples where we've had to invest more capital over time to fund additional and unforeseen operating losses. So we're spending a lot of time making sure the capital that we put in the business is sufficient to get that company to cash flow self-sufficiency. And we have a very good track record there. We're pleased about that. And then lastly, the loss ratio across 40 plus investments that we've made in growth capital has been less than 1%. So we've had one investment, in fact, that we've lost capital on across over 40 investments. With that, I'll move on to the second page. This is slide 3 now. Just very quickly on the growth capital team. I originally joined Excel KKR in 2009, and we sort of embedded this effort within the broader team in the firm. Since that time, our dedicated growth capital team has grown quite a bit. You'll see on the right side of this slide. And the platform from which we draw leverage from in terms of other members of our team that are in charge of sourcing new investments, members of our team that are in charge of helping us execute on those investments, and our internal and kind of purpose-built consulting group. All of those portions of the broader platform have grown quite a bit and given us an enormous amount of leverage over time. So we're happy with the way that both the team and the organization have grown here to support the effort. Slide 4 really just touches for a second on our focus. We happen to be a very focused firm, I think relative again to other folks you may have seen, on business-to-business software. That's really what the vast majority of what we do is focused on that part of the market. Matt mentioned before, we also have a sort of a smaller portion, about a quarter of what we do that's technology-enabled services. That tends to be software-enabled services, so we're really drawing back on that business-to-business software theme. But that's really where we play. It helps us in many ways. Obviously, it helps us in our due diligence efforts. It helps us in our value add to the companies once they're in the portfolio. It helps us with our understanding of the market. It helps us attract new talent, which is very, very important these days, into the portfolio companies. And it helps us with all kinds of pattern recognition. So we find that focus is very valuable. And B2B, business-to-business software, on the bottom of this slide, you'll see has key attributes that going back to kind of being in businesses that we feel like can weather storms that may come with different investment cycles. Very, very high recurring revenue streams that we have in these businesses. You'll see in our last fund, 86% of the revenue, it comes in the form of annually recurring type contracts that these companies sell to their customers. And then on the bottom right, the renewal rates on those contracts are also very, very high. This means that, of course, there's an established base of business for each one of our portfolio companies that they don't have to replicate every year. They're just trying to grow up and beyond that base. And if we're doing our job right and picking mission critical business-to-business software, it tends to be the last thing in an economic cycle that a customer turns off or opts out of. And that's why these renewal rates are quite high. With that, move on really to two last themes. The first we've touched on before, so I won't spend too much time. But again, we spend quite a bit of time on minimizing left tail risk in the portfolio. And we do that through an attention to governance. That tends to be a lot of consent rights that we as minority investors have on significant business actions of the company, and gives us an ability to really step in and have more influence if things aren't going according to plan. We pay careful attention, as I said before, to our depth in the capital structure to make sure there's cushion beneath us in the capital structure if the company suffers any enterprise value degradation. Seniority is really another way to speak to that same issue. And then we've talked about the business resiliency of these. We also have, one other thing which I would call a structure to our investments. Sometimes that comes in the form of dividends. Sometimes it's a liquidation preference that's greater than one. But these are ways for us to get a structured baseline return, even if the company doesn't perform to plan. So we'll talk about converting to common equity, which we have in all of our investments. But that left tail, that structuring helps us get some baseline return. Again, even if the company does not grow as we foresee it to at the time of the investment. With that all said, at the bottom of the page, we do maintain our ability to convert to common equity, and therefore the upside embedded in that, and that's obviously reflected in the returns the funds have generated over time. We have a slide on slide 6, which really speaks to the composition of our returns. The light blue here shows what's really tied to our conversion to equity, and that really drives most of the returns. The gray shows what comes to us through structure. Now, in a down market, those two bars might show different proportions. We might be getting a different proportion of our returns through the structure that we make in these investments, and that's why we pay attention to that structure over time. With that, I'll go to slide 7 and talk about sort of the last theme here, which has evolved and developed over time as we now enter our fourth growth capital fund, and that is the ability to capture optionality that's embedded in our initial investments. And what I mean by that is, when we make an investment, we're usually own less than 50%. Typically, it's around 25% of the initial investment. Oftentimes, the rest of the ownership is relatively fragmented in that business. In addition, there's oftentimes ongoing capital need for the company. Sometimes that's liquidity desire for the other shareholders. Sometimes it's driven by an opportunity to go out and make follow-on acquisitions. While that's going on, we have time over the first anywhere 6 to 24 months to evaluate the company, how its product market fit is, how strong the management team is, how we think it's doing in terms of the competitive landscape. And based on that, all those factors, we have the ability to selectively put additional capital behind a certain number of companies in our portfolio. We found that to be very fruitful over time and drive a significant amount of the capital that we invest, and also in a way that helps us have really selection bias when we do that. So we continue to focus on that quite a bit. And the last slide in the deck, slide 8, is really some case studies that I won't go through each one of these, but where we've selectively invested quite a bit more capital behind some of the better performers in our portfolio. I would probably point, if I had to point to one here, to Kimball on the bottom left, where about 3.5 years ago, we made an investment into a software company that provides software for professional services. So it could be consulting firms, it could be the implementation arms of software companies, lots of different examples in a big global market there. But we made an initial investment. We owned a little bit less than 30% of the business. The founders then sought some more liquidity after about 3 years. We provided that liquidity, took our investment from 28 to 73. What's not on this page is we actually also just funded a very substantial add-on acquisition for this company of a business called Mavenlink. The company is actually about twice as large as Kimball is, and put additional capital in again there. So those are a good example of the factors that may drive that additional liquidity need, both shareholder liquidity as well as follow-on M&A. Those are really the extent of the Tom's here, by the way, guys, and those extent of the prepared slides we have. But we're happy to do some Q&A here if the group has questions.
Thank you very much for that presentation, and noting that we all had good conversations, and the IFC has recommended. Are there particular questions for the managers here? Mr. Treasurer, any further comments on?
No, I don't have any further comments, Mr. Chairman.
Any others? I don't know if the superintendent is still with us. It appears maybe not. Oh, she is. Okay. Madam Superintendent, any questions? Having none, what's the pleasure of the board?
Well, Mr. Chairman, I would, the state treasurer recommends that the board select the fund Excel KKR Growth Capital 4 as a state private equity investment manager, conditioned upon the approval of material terms and successful contract negotiations.
Thank you, Mr. Treasurer. Is there support?
Second.
It's been seconded by the secretary. All in favor signify by saying aye.
Aye.
Congratulations. I see that's unanimous. Thanks very much. From what our staff is telling us, we really would appreciate if there's any more room you can give us. We would like that. So thanks very much.
Thank you all.
Congrats.
Bye-bye.
Mr. Chairman, the next matter will be the terms and conditions, and Lisa Jurdy Spillman is here to present the terms and conditions of the fund.
Lisa Jurdy Spillman, it's nice to see you. Please, the floor is yours.
Good morning, Mr. Chairman and rest of the board. I would like to go through the material terms briefly, if that would be what the board would like me to do.
That would be terrific. Yeah, I think you can do it pretty much, noting that we've all been briefed on it. You can do it pretty much at a high level. Thank you.
Okay. Thank you, Mr. Chairman. So as you know, this is the Excel KKR Growth Capital Partners for a Limited Partnership Fund. They are doing an $850 million raise, and our stock commitment was 50. We expect to be somewhere in the $30 million range. The general partner and its affiliates will be committing at least $85 million to this. The management fee is 2%, which is customary. There is a carried interest of 20% or 25%. That depends on the fund's multiple of invested capital. We expect that to be closer to 25% since they've gone over 2 multiples on invested capital over 10 years. There is a hurdle, a 6% hurdle. So we would receive our capital back, our pro rata share of cost back, and 6%, and then the investment manager would take their carry. Turning to the next page, it's a 10-year term and may be extended once for 18 months at the discretion of the general partner, again for a year at the discretion of the general partner, and other extensions of this fund can occur with LPAC consent, with the advisory council consent. The tax withholding, so the Excel KKR has agreed to our tax exempt status provisions. These redemptions are not available. The interests in this fund are not redeemable. There is no provision to remove the general partner, which is a little unusual. However, our risk assessment with respect to this ascertained that that's not a compelling reason to reject this fund. There are provisions in there that permit limited partners to terminate the fund. There are key man provisions, which are customary for both Tom and Rob. There are customary default provisions. So if a limited partner defaulted, there are customary provisions there. The limited partner enjoy limited liability, which is customary. There is leverage employed in this, which is allowed under the IPS, and it is provided under the documents. There is a right to recall distributions that have been provided to the state. There is a cap on this. The state has a limited ability to transfer its interests. I am led to believe there is a pretty active secondary market that poses a potential should the state wish to transfer its interests. The general partner has the discretion to grant us an ability to transfer those interests. The disclosure, transparency, and reporting on page 3 are customary. We will receive audited financial statements, unaudited financial statements, tax information, as well as information about the portfolio companies periodically. They've agreed to the Wyoming Public Records Act application for the state. They've acknowledged their fiduciary duties. There are expected to be conflicts of interest. These are in line with other provisions in similar funds. There is an LPAC and advisory board. The state has asked for a seat on that. We were denied that. However, they said they would consider that for future funds, that if the state were interested in those. They have a valuation policy that we reviewed, and it is appropriate. They've agreed to give the state its most favored nation status. They've agreed to acknowledge our indemnification limitations. They will maintain an appropriate level of insurance. They've got our investment policy, and we've reviewed their documents and made sure they're in alignment with the state's IPS. There are no arbitration provisions on page 5. They've agreed to our state sovereign immunity provisions, as well as jurisdiction in the state courts in Wyoming. Does anyone have any questions, Mr. Chairman?
And thank you, Ms. Jody Spillman. Are there any questions? Any questions, Madam Superintendent? I don't hear any. Ms. Jody Spillman, I want to acknowledge your hard work on negotiating these things. One of the challenges, we're big, but we aren't that big, and sometimes we can ask for things and we get them, and sometimes we don't. So I really appreciate both you and Matt and your work on this.
Thank you, Mr. Chairman.
Thanks. With that, Mr. Treasurer, is there a matter that you would like to
Yes,
advance?
thank you, Mr. Chairman, and I'll echo your platitudes on these guys. They're a great team. They do good work, and we're still having a good time at the treasurer's office. Not every day, but at least Tuesday through Thursday. So, Mr. Chairman, the state treasurer recommends that the board approve the material terms of the state investments in the fund Excel KKR Growth Capital 4.
I'm sorry, is there support for the motion? It's been seconded by the auditor. Any further discussion? All in favor signify by saying aye.
Aye.
Thank you. Congratulations. That matter carries unanimously. Thank you, Mr. Fleming. All right, Mr. Treasurer.
Yeah, Mr. Chairman, our next matter before us is D4. And this is a vote on a request by Large Project Loan Program recipient Atlas Carbon LLC. I think what we'd like to do is listen to the presentation and then move into executive session to review some confidential trade secret information. And so I think we look at the presentation first, and then I'll ask for a motion to move into executive session.
Okay. Thank you, Mr. Treasurer. So who is on?
See, I think I see Frank and I see Raza, and I'm not sure who the other two gentlemen are there. I recognize their faces, but I can't read the bottom there. So Could we ask them to introduce themselves, Mr. Chairman?
Please, would you introduce, I see we have 5 people that, or 6
Yeah.
maybe, that have added themselves. So please introduce yourselves.
Mr. Chairman, good morning. This is Reza Hashimpour. And want to just hope that you and the Slib board had a wonderful Thanksgiving. I am joined by Frank Levy, our executive chairman, and Mr. Pearson from Wood, the vice president of a North and West operation, Steve Conway, senior vice president of downstream from Wood, Tony Bell, our CFO, and Brian LeBourgeois, which is an advisor to the CEO, which is me and the company. We certainly appreciate the opportunity to share with you today what we want to talk about. With that said, let me pause, Mr. Chairman, and see if my other colleague would like to say a few words. Mr. Levy, anything, sir?
Oh, just an hello to to all of you, and reiterate Reza's hoping that you had a great Thanksgiving, and look forward to showing you all what's going on with Atlas and coming to a mutually successful conclusion. So,
Mr. Pearson?
No, nothing for me. Good morning, everyone.
Mr. Conway?
Yeah, nothing from me, but very welcome. And I appreciate the opportunity to join and meet with you guys again.
Great. Mr. LeBourgeois or Mrs. Bell, either one, anything you would like to?
Thanks for having us.
Good. Okay. Mr. Chairman, with your permission, we have sent you the Slib board presentation. If I have the chairman and the Slib board permission, I can proceed.
Please go ahead.
Thank you. In our presentation, we share with you about the sales update. I think that one of the things that has happened is sometimes when a market contract, a lot of negative thing can happen, but also a lot of positive thing can happen. And we were fortunate that the positive thing came our way. Atlas, for past several months, we have been able to sign a lot of contractual agreement. One of the things that we realized and recognized that when we looked at our contracts, even from the April of this year, was the fact that we had the contracts with some municipalities and others, but they can purchase what they want, but there was no mandate that they had to fulfill their capacity. So we felt like that we need to make some adjustment on our contract. So I'm happy to report that we signed probably by far the largest contract that Atlas has ever had. That is a take or pay. That gives the Atlas Carbon a baseline every year. The beautiful about the take or pay is the fact that it's a £5 million a year. And at the same time, we have got a clause in there that it says that if we have any excess, we have to send that their way as well. So this could be well over £5 to £6 million a year on that. So we are very delighted to have a large agreement. Another thing that we have done, we have made a lot of adjustments on our existing contracts and also reoccurring businesses that purchase from us. And one of the things we think is important that we were trying to narrow out the terms that when we get paid. At the same time, we also try to do is converting a lot of reoccurring customers into a contractual agreement for the long term. And that kind of brings the consistency to the company. As you guys already know, that because of what we are facing as really the market, and I was just listening to all the conversation that happened before us, was the fact that sometimes the inflation can have a lot of adverse effect, and I can certainly tell you it has had adverse effect on a lot of things that have associated with our business. And I give you one of the example is the shipping. Shipping has been pretty much expensive And the only thing that we can do, we have to pass that on. We have to pass that on to our clients, and there's not much choice there. And also receiving material for a plant has been a tremendous delay. And when we come to the production time, I let Mr. Pearson to have a conversation about how the plant is doing. We have provided you a chart that shows the kind of what I call an elbow shape on our sales trajectory. This did not happen by accident. This has been going on for a while. We've been working on it collectively, and as you can tell, as the July month, and then we go through August and then September, then we have kind of a hockey stick event is happening, and so we're doing a lot of great things right now. We provided the board, the chart and a matrix, and of course we had to block out the name of the customers, but we have about a little bit over 12 million pound worth of signed contract, additional 2 million pound worth of reoccurring. And I think since that time we provided that, we have submitted to the treasurer. Since we've been doing that judiciously from the last Slib board, we did not want to make sure that the treasurer office, he's very hands-on, and his team. So we continuously send the information to them as we were getting contracts and things that would be important for the treasurer to see. One of the things that I can share with you is that we are talking to one of the vendors, and they are in Australia, and they notified us that the shipping from Australia has ceased to the West Coast of the United States because of all the backlog that is having and is happening in the industry. And so, as you know, the plant capacity is 16 million pounds. We are almost at 15 million pounds. So you may say, are you guys going to stop? Well, we are not. We actually have about 18 million pounds worth of proposal and pipeline that we are working on. And we intend in 2022 to close out another 5 to 10 million pounds. And the reason we're doing that, Mr. Chairman, is the fact that some of the contracts that we have signed earlier on is not a take or pay. So what we're trying to do is either we try to convert those to take or pay, and also we got to make sure that we are a little bit oversubscribed on our capacity, because not everybody going to order 100% of the capacity. So we think the right number could be about 20 to 25 million pound worth of contract. That would be a good thing for us. I don't need to tell you this; you already know. Pretty much a lot of costs have gone up, and those costs are being passed on. But one of the things that is key, I think, that I want to bring to the Slib board attention is the fact that the demand has gone up, but the production in the industry that we are in has basically not expanded. So what did that do is the fact that it has put a lot of pressure on pricing. So what was being sold at 39 cents, 40 cents, 41 cents a pound, now those prices are changing now. The prices are going up. And now a company like Atlas, that we have capacity, we can basically name our price, and has put us in a good position in a latter part of this year, walking into 2022. We have, just to let you know, we have a number of entities has engaged with us for the acquisition of the Atlas Carbon. We are engaged with them and having a dialogue. And of course, we have signed confidentiality with those entities. But we feel like that that would be, it puts us in a place that we have three goals that we want to achieve. One, if the acquisition happen or a merger happen, we want to make sure that the state of Wyoming is fully paid. Number two is our investors are fully paid. And number three, our employees are also benefit from that event if we're so fortunate. With that, I'm going to pause, Mr. Chairman, and if you give me the permission, I can stop and open it up for question, or I can continue and have the Wood to take on the production conversation so we can proceed forward. I leave it to the pleasure of the board.
Thank you very much, Mr. Hashimpur. Are there any questions for him? Mr. Treasurer.
Yeah, Mr. Chairman, I guess as we move forward there, I kind of clicked off the possibility of about in this next year, 15 million pounds. Is that less in the ballpark that you said you could have or do have contracts on, or you expect to be?
Yes, Mr. Treasurer. Thank you for the question. We have right now, as we provide the slip board, we have a little bit over 12 million pounds signed contract, which 5 million of that 12 million is take or pay. We have additional 2.5 million pound worth of reoccurring business. Those are the customers that we are converting to a long-term contract. That puts us almost shy of 15 million, but we intend to sign another 5 to 10 million pound worth of contract in 2022. And the reason we want to do that is because 7 million of 12 million pound worth of contract that we have, some of those customers do not order 100% of what they have said in the contractual agreement because it was not take or pay. So what we want to do is we want to make sure that our plant, we can maximize the capacity and squeeze every inch that we can. And as you will hear very shortly, Mr. Treasurer, Wood is working diligently on increasing a yield in the plant and doing a lot of things so we can squeeze as much as production as we can out of this plant.
Well, and Mr. Chairman, I guess that's what I want to kind of look at as far as and we've talked about marginal cost of return and what the total capacity is. And I guess I have to assume the utilization of the plant utilization is fairly low if we're putting $2 million in now and we're getting 4 million pounds out. And now you're looking at probably putting in $2 million and getting 15 million pounds out. I'm trying to figure out if you're going to have a ratio like that, I think you'll probably have a positive margin. But I'm skeptical about how much money you're going to actually need to get that 15 million pounds, or whether you're going to be in a capital crunch and how that's going to be mitigated or handled. So I guess we'll probably know more about efficiencies and stuff from your Wood representative. But yeah, it'd be interesting to see what the actual plant utilization is and its actual capacity. I know we've been trying to upgrade that plant for the last 2 draw cycles, and without a lot of success as far as the plant upgrades. So I didn't know exactly what your guys' game plan is, if it's going to be anything different than what we've had before. But I'm glad you actually have contracts now that means something. It's Mr. Chairman, it almost is like my old Coors barley contract. We had a right to supply barley to Coors, but they didn't really necessarily, with all of the contract fine print, they didn't have the duty to receive it,
Okay, further questions from the board? Thanks, Mr. Treasurer. If that's the case, then who is ever up next? Mr. Hashimpur.
Thank you, Mr. Chairman. Mr. Pearson, would you talk about the production and some of the conversation that Mr. Treasurer had? And then after that, Mr. Conway. Go ahead, Mr. Peterson.
All right, thanks, Mr. Chairman. Just highlighting the slide in the pack that was supplied before the meeting. I'll just run through it quickly, and then I can talk specifically about some of the questions. But so we've supplied quarterly updates through Atlas to the Treasury's office on work that's being done at the plant. So this slide's highlighting essentially the second half of 21, and outside of just normal day-to-day execution, this slide highlights some of the focal point areas that we have right now. And so we're executing work and analysis right now in relation to all three of these categories. So process simplification, critical equipment optimization, and redundancy. And so in Q3 and 4, we've worked on increasing plant air, which has made major improvement to the plant. We've done some modification work and continue to do some modification work to the back end of the plant, which not only provides some redundancy for reliability, but it also increases the throughput rate that we can produce at. And then the third, focal point right now in this quarter is milling operations and adding extra capacity to meet the demand as we mill product to leave the plant, and to give us again some more redundancy to ensure that our reliability stays very high. Production rate and product quality are always at the forefront of what we do. Depending on the order cycle and where we're at. I mean, on a day-to-day basis, that really, is what drives our focus of the day around quality. But we're constantly trying to improve both rate and quality to, one, meet the huge sales demand that Mr. Hashimpur just explained, and to potentially open up new markets for Atlas. And so we've executed work in Q3 and 4 related to the cyclone, a modification project that has had a very positive impact on both rate and quality. And additionally, we've completed work in the secondary part of the plant, which is where we are sizing the feedstock material, the cold feedstock material, before it actually goes through the production process. This project's been very successful and has allowed us, one, to size product faster, more rate, and we have created a world now where we're not losing some of the finer material through the process, which is actually the higher quality material. So it's been very, very successful as well. Steam and air injection at the hot holding reactor are projects that we're currently working on. So we're analyzing the impacts of different volumes of steam and air, and what it will allow us to do from both a throughput perspective and product quality. Safety management, safety is absolutely the most important thing we do every day. When Wood came into the mix and took over operations in October of last year, we launched on what we would call our phase 1 of safety management implementation. And so we're in the second phase of that, which is a little more refined and more intense as it relates to hazard identification and mitigation, fine tuning, standard operating procedures, things like that. So that's going very well. Preventative maintenance has been at the forefront since October of last year. We're constantly looking at the program and the best practice and refining as we need to ensure reliability is as high as it can be for this plant. And then we have brought in some of our third-party business partners and are starting work and have done work through this last half of the year in relation to predictive analytics. In the slide, you would see in the bottom right corner a robot that's equipped with very high resolution sensors that autonomously inspects critical equipment around the plant and flags anomalies from both a production optimization perspective and from a potential failure perspective. So, we hope as we move through 2022 that we can, create a world at the plant where we, we're much more predictive than reactive with some of the critical equipment. So that's the slide in a nutshell. Mr. Treasurer, you talked about, rate. You talked about run times. We've seen increases in both throughout the year. It really comes down to the product that we're creating when you look at rate. But we average between 1,200 and 1,300 right now on rate, with the intent of pushing that up above 1,500 as we move into 2022 with some of the project work that we just talked about. Quality again is really driven by the customer sales pipeline, and so we've shown the ability to go to 600, just north of 600 if we need to, from an iodine quality perspective, and obviously as low as 350, which is what we're selling to the power plant. So it's really driven by the sales pipeline, but we do have a large range to play with today, and again, the intent is to continue to push the envelope on how high can we go, and can we open up new markets for Atlas. But with the sales pipeline that Mr. Hashimpur just showed, we have a large number of contracts that are sitting in that 400 to 500 range, and that's really a sweet spot for us. So with that, I guess I'll open up to any questions.
Thank you, Mr. Treasurer.
Okay, so your iodine rate is 350 to 600 and most of your stuff is around 450. That's what I understood?
Yeah, when you look at the sales contracts, I mean, we see a mix of 350 all the way up to 500. We have the ability at a high rate to produce anywhere in that spectrum. So that's very positive for what the demand is today. We have pushed it up as high as 6, and we'll continue to work that number up to give some optionality to Atlas as they look at potential new markets.
Okay. And you said a rate 1,200, hoping to get to 1,500. Now, is that pounds per hour or?
Yeah, so that's pounds per an hour, and that's really related to that sort of sweet spot iodine number I talked about, 400 to 500. We can go higher than that, and we do go higher than that when we're producing lower quality material for the power plants. But we're constantly working to push the envelope up as high as we can for the sweet spot material.
Thank you, Mr. Chairman.
Thank you, Mr. Treasurer. Are there other questions? Other questions? Madam Superintendent, I don't know if you have any questions. No questions. All right. With that, very much appreciate the presentation. Always nice to see you, Mr. Treasurer. Did you want to consider this matter in an executive session, I guess?
Mr. Chairman, if that's all the presentation from that we're going to get from Atlas, I'd like to move into executive session to look at some of the confidential information. And I would request that the business council members be able to stay here in the executive session, if that's appropriate and all right with Atlas.
Thank you. And I think you probably gave me a piece of housekeeping. Are there further things that Mr. Hashimpur or any of you would like to bring to the board's attention?
Yes, Mr. Chairman. Mr. Steve Conway from Wood, which is involved in other aspect of a technology for the company, he's on, and I would like for him to share with you a few things.
All right.
Mr. Conway.
Yeah, I mean, just a couple of things and really to build on what Nick's saying. Nick, within Wood, Nick has the harder part of the job. He's at the plant delivering. I sit at the front end. And I think as we talked about the last time we met, one of the good things is we've been working on the next generation plant design, and it was always envisaged that we would look to see if there was anything that we could do to the existing facility to enhance it, both in terms of quality, production, and uptime, for the plant. I think what you're seeing in some of the things that Nick's team's doing now, we've embedded some of those things into the process. That's now given us, better quality. It gives us a range of iodine that we didn't have before. And I think also it's given us more uptime, which I think to the point in the question about, well, how can I produce more with the same amount of money? Well, it's the same equipment. We didn't add additional equipment. We just played with equipment to make the equipment more efficient with the provision of air, like the hot hold and things that Nick was talking about. I think the other thing is, we've had the ability to leverage an individual within our company. Unknowns to me, he has a wealth of history with coal in his prior life, and we've been able to do things that I'm not sure that we thought were possible, because we came in as a third party working with Atlas Carbon and basically bought a cold set of eyes to deliver some of what we're delivering today. But certainly the plant appears to be working a lot better. The production rate's up, and we believe that we can take the iodine line even up further, as Nick was saying. But we need to do it in a controlled manner, do it the right manner, and make sure we look after what we have to do, and that's delivering to customers. I'll yield to that unless there's any questions, and thank you for the opportunity to speak.
Thank you, Mr. Treasurer.
Yeah, Mr. Chairman, just wanting to go over the assumptions here. 1,200 pounds an hour, and I guess, well, even if it was 1,500 pounds an hour in a 40-hour week at 1,500 times 40-hour week, that's 60,000 pounds. And we're looking at 12 million pounds that you're planning?
Yeah, I can take that one. So we do work on a 24-hour production schedule.
Okay.
And so that number does increase significantly. Well, one thing to note, the plant currently is permitted at about 1,750 with the ability to raise that. And so when I talk about the bar that we're pushing towards, as we move into 2022 and through 2022, it's really to, maximize that rate to, 17 to 1750. That's our current goal. And so, again, we can hit that today if we're making lower quality material, which we have a large portion of those contracts. As we ratchet the iodine level up today, we lower that rate just a bit, but we're working towards being able to sustain that higher rate with the higher quality material.
Okay, and so downtime is what, 1 8-hour period every week, or normal downtime?
Yeah, I mean, our goal right now, we have scheduled downtime right at the plan, we have unscheduled. Our goal is to hit a 97% or above uptime. We're not there yet. As we've worked through the year, we've seen major increases to that uptime, and right now, we're running. It's a mix, so if you averaged it out, it's closer to 80%. But in the last few months, we've been north of 99% on most weeks. So we're well on our way to meeting the goal of a consistent high quality uptime for the plant.
And Mr. Chairman, is that 1750? Is that the same rate as a new out of the box prototypical plant?
No, I mean, Mr. Conway, you can hit that one. I think it would be north of 2,000 pounds, but
it'll be between 2,000 and 2,500 is what we're looking at right now. It will be north of 2,000.
Yeah, I was just wondering because I know that the governor has talked to me about a potential other activated carbon plant maybe in Wyoming. And I thought at some point in time, I'm not sure where that one's at, but you guys needed to know about that because you're in the business of selling these things, you know? So, okay. I don't have anything else, Mr. Chairman, right now. No?
Thank you, Mr. Treasurer. Superintendent, any questions? No? Secretary, Auditor. Okay, Mr. Hajipur, other presentations, or is that a wrap?
I think at this point, I will pause, Mr. Chairman, with your permission, and we can proceed as Mr. Treasurer wanted to move to the executive session. So whatever your pleasure is, sir.
I think it might make sense. So here's my situation, members of the board. I have to step out briefly at 10 o'clock. That's in about 5 minutes. I would recommend that maybe that's an appropriate time for a break. And then if we came back, we could come back and go into executive session, if that makes sense.
Mr. Chairman, when do you think? So Roz and Frank know when we might be coming back. Brought what, 15 minutes in executive session? You're going to be back for that in 15 or 20 or?
Yeah, I would say the break can be short. I just have to step out for a moment. There's somebody coming here.
Right.
So maybe a 5-minute break. And I guess if that's the case, then I'm sorry.
But have them back at 10:30.
If you think we can get through the executive session by 10:30.
I think we'd be pretty darn close. It wouldn't maybe extend maybe a little longer than that.
Okay.
Mr. Chairman, just to make you aware, Ben and I did not appreciate the fact that there was going to be an executive session for this matter. So we're going to have to finagle the technical stuff during the break. But likely those who will be included in the executive session will need to receive a Google link to come in via Google Meet. So if they'll be looking for those links, we will get that out. Ben and I'll sort this out quickly during the break.
All right. Thank you,
Thank you.
Madam Director. So I guess my sense is that means the break may be about 10 minutes or so, 10 to 15. And then so that probably makes
10:45.
10:45, if that's good for you. And if that's the case, Mr. Hashimpour, why don't you, the last matter, why don't you go ahead and bring that up? And then right after that, we'll take a break.
Okay. I think the last thing that we would like to, how much time do I have, Mr. Chairman?
You have right around 5 minutes or so.
Okay.
That's
Okay. Not a problem, Mr. Chairman. I appreciate it. And I think what I just want to share with you is that at the conclusion of this conversation is the fact that what we are accomplishing in a very tough time, especially in an industry that is production is in a contraction, but the demands are exceeding. And one of the things that I think we're doing is the fact that our product is really much in demand. We actually get call from municipalities that when they put it out a bid, nobody's bidding on it. And they want Atlas to bet on it because our product for the coal-fired plant are probably by far one of the best. And if only thing we were selling, Mr. Treasurer, if only thing Atlas was selling was to coal-fired plant, 325, 350, we can produce that in a very fast speed, and we could produce a tremendous amount of that every day. But as Mr. Pearson correctly stated, we have a lot of different expectation from our customers based on the contractual agreement that we have to accommodate. And that's why we think the second generation plant that we have is answer to a lot of future things that is going to be coming our way. And as far as the production, I think that we are very keen on that, and we are very comfortable that we're going to be able to not only achieve what the numbers that need to be done, because when it comes to the take or pay, Mr. Chairman, we really don't have much choice. We have to deliver a product to our clients, and that's where we have a 10 billion pound gorilla Wood is in charge of a production, and that's their task to make that happen. And that's one of the reasons we're requesting a $2 million reclassification, so we can be able to finance our contracts that we have in our hand. With that said, Mr. Chairman, I got 2 minutes left, and I'm going to yield back to the chair.
Thank you very much. Any questions from members of the board? Again, Superintendent, I'll begin with you. None. Secretary? None. Auditor? None. Mr. Treasurer? Well, really do appreciate the presentations and the materials that you provided. Madam Director,
Mr.
recognize
Chairman,
you.
just to update you, thanks to Ben planning ahead, we've got the Google links out. So it's just a matter of when the board wants to go into executive session. We'll just have to pause everything for a minute to allow those folks to dial in, but we've got it squared away. So we won't need 10 minutes. It'll be whatever the board's desires at this point.
Okay. Well, let's try to come back in about 5. If that works for you, board, that gives us about 5 to get everybody dialed in, and we'll reconvene right about 10 after 10, if that makes sense. So with that, we'll stand in, I guess, what's the word? Recess? Yeah.
Yes, recess.
Yeah. All right. Thanks. the superintendent's on yet, but we do have a quorum, and before we entertain the idea of an executive session, I wonder if Mr. Peters or Mr. Miller, you wanted to kind of go through this. I think really the notion here is that there are some confidential business information items. And so if you could kind of walk us through what the right protocol here is for entering executive session. And then, Mr. Treasurer, I will pass it back to you for a motion.
Thank you, Mr. Chairman. So the Public Records Act does provide that trade secret information is confidential by law. And that is a reason for going into executive session, is to receive confidential information. So the board can go into executive session and receive confidential information. But I don't believe that you can deliberate in executive session. And once you emerge from executive session, you'll have to be very careful in your deliberations to avoid divulging the information that you received in executive session. You can be vague in general, but just tread cautiously with information received in executive session.
Thank you. I think, this is a little bit out of the normal order of things, but I think it's appropriate considering the fact that there are some major potential changes that are being asked for here. So with that, Mr. Treasurer, I would entertain a motion.
Mr. Chairman, I move that the State Land Investment Board enter into executive session for the purpose of receiving confidential information from Atlas Carbon.
Very, very good. And I think that motion also allows for members of the Business Council, which I think is Josh Keefe, if that's correct, to be here.
Yes,
Is
Mr. Chairman.
Okay, thank you. That motion is before us. Is there a second?
Second.
It's been seconded by the secretary. Is there any discussion prior to calling for the vote? Hearing none. All in favor signify by saying aye.
Aye.
Madam Director, we will be entering into an executive session. I understand this is a little bit sort of spur of the moment, so there are some technical aspects. Do you want to cover those? And then we'll go.
Yeah, Mr. Chairman, I believe
get us back in session. I appreciate everybody's patience. So for those who are members of the public, you'll note that we were just in executive session to discuss, I guess, trade secrets and commercial information, all appropriate matters for an executive session. At the end of that session, it appears that not all of us had the same degree of information, which I think puts us in a sort of an awkward position here. So I'm going to ask the board if they have any particular thoughts on this, or if they have a motion that they want to entertain, or if they want to continue some further discussion. Mr. Treasurer.
Yeah, Mr. Chairman. You know, I think I'd like to get I guess Atlas's permission to share everything that they shared with us on a confidential basis, and to request that they do a true break even in a marginal return analysis that's specific on a first, what is their break even if it's 89 cents and they're selling their product for, I'm not sure what the average is, but if it's 60 cents, then we need to figure out, you know, at what point in time they actually do break even. And the way I view our security on the 15 million, it's a three different areas, but primarily that was for construction loan on plant. And the last several draws, although we had made them thinking that in large part it was going to be another construction loan, they were moved into more of the operational side of the business, and the construction necessarily, some upgrades had been placed, but not necessarily building the main upgrade, which was another reactor alongside the one that was there. So we really don't have that type of collateral that we had that was originally looked at in the original loan, which was a construction loan. But what we do have, because some of that money was spent in a way that Atlas's management wanted to pursue an engineering plan that would allow them to sell and license a package operation with wood on plants around the United States and indeed around the world. And to date, even though our pro forma cash flow from last year, I think, entertain the possibility if one, if not several of these licenses would be in the offing. I believe one to a coal mine in Poland. But as we all know, the green energy bug has bitten the whole world, and that I think is no longer a possibility for that coal aspect. So we do have some I guess security in the intellectual properties, and those have been, I think, to date, haven't been really turned into and monetized. So it's unclear as to whether or not they have a security value in the future that could be monetized because the experts that know more about it to date haven't been able to monetize those intellectual properties. So I think it's really important that we understand the marginal rate of return and how we could, any further draws would be, monetized with free cash flows. Because that's, we don't have necessarily a construction loan anymore if we move this into primarily operations. But I think we need, at least I think I need, and I think the board needs more information to look at it. And then I'd also ask Atlas Carbon to look at the what if happens if this request is honored in the 9 months after they run out of capital, how they would actually operate in the future, or where their next available credit opportunities may come from. Because without some, I think, fairly large degree of confidence that we can move forward and Atlas can move forward with another credit line, it's going to be, whether it's through the business council, private equity, or whomever, or whatever the type of partnership that might occur, I think that the light at the end of the tunnel is probably a little bit past the 9 months as far as being able to be a self-sustaining entity. I think that Atlas has made great strides, and there is some potential there. I really believe that. Things have been moving forward, but I think they need to improve their business practices to further increase their margins. It's really hard to have a cost of 89 cents a pound and sell something that's 30-40% under your cost of production. That means you almost have to double before you break even, or somewhere in that range. So I guess, Mr. Chairman, I would say with that explanation, I would move to table this to our next meeting. Ask Atlas Carbon to supply all that information to our office and allow us to forward it all to both the business council and all the members of the Slib board, and try not to be so cryptic as far as what is confidential and not confidential, because I think we have to really look at all of the information that we can have to make sure that the state is collateralized, and we can move forward with this partnership. I think it's been a good partnership for both interests to date, but at this point in time, I think we need to get more information to make sure that we make a final disposition in this matter, but do it with all the information that's necessary to do that.
Thank you, Mr. Treasurer. So I hear that as a motion to table. That needs to be immediately seconded without discussion or not. So I'm going to ask for a second.
Second.
It's been seconded by the superintendent. Goes immediately to vote. All in favor of the table?
Mr. Chairman, I did not second that. That was the secretary, I believe.
Oh, okay. Sorry, I misspoke. So it's the secretary. All in favor of the motion to table till the next meeting, pending some further information, signify by saying aye.
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 That motion does carry for Atlas Carbon. Appreciate the conversation this morning. What I wanted to give you was perhaps kind of an explanation of how I think part of the problem here was that we weren't all with the same information. So normally, before we have an open public session, there's usually an executive session if there are matters that are pertinent for executive session that this board has the day beforehand. All matters that are marked confidential that go to the Office of State Lands and Investment are treated as confidential. And if they pertain to trade secrets or commercial information, those are exempted from FOIA requests. And so you can be certain that they'll be handled well. And I think that for the next meeting, if this comes back up, I think it makes sense that we have those materials in advance. The motion to table means it will be not discussed until it is brought up by a member from the board, seconded and voted to bring back on the table. So if there's any questions as to process, I would entertain them now. And I know this is a bit out of order, but I think it's important to explain the process.
Mr. Chairman,
Yes, Mr. Hashimpur.
with your permission, sir.
Yep.
If we can get from the treasurer exactly what the treasurer is looking for in writing, we will be happy to provide that. And on a second point, Mr. Chairman, and to the Slib board, I have a very much a clear eye about what the state of Wyoming is looking for and the responsibility that you hold. And as far as have a capacity to look at all information. It has never been Atlas Carbon or my intention to hide any information or prohibit for a Slib board. Only thing what it was is the fact that, as I understood, was the fact that if it's provided to a Slib board, then it becomes a matter of a public disclosure. And we have absolutely no issue for a Slib board. We are happy to resend all of those documents back without any confidentiality on, with none of it. It's just the fact that we live in a very competitive world, and we just want to make sure some of that stuff cannot become public. And that's the only reason we put what we put. It was not to share it with your Slib board or the state or anything to that effect, because if anything else, Mr. Treasurer will tell you we have provided him mountain of information. But I just wanted to just let you know that and let the Slib board know that I'm very grateful. We'd be happy to provide you any and all information you're asking. I just wanted to let you know why we put those confidentiality on, and that's all. Thank you very much.
Thank you, Mr. Hashimpur. And I did not mean to imply in any way that you had been withholding information from OSLI. I think the process on our side probably had an error in that we should have had these materials prior to this meeting. And that's why I just was advising you, it's good to check in with OSLI beforehand on any of these board matters, just to make sure that the materials are what they need to be. And I do thank you for being as forthcoming as you have been. And we remain very optimistic about your company.
Mr. Chairman, I am very grateful to the Slib board and the treasurer. Thank you so very much.
Thank you very much. So with that, Madam Director.
Mr. Chairman, that brings us to D6, which is acknowledgement of annual disclosure filing. The requirements of Section 3.4 of the Master Investment Policy is for the board to formally acknowledge in the meeting minutes that certain applicable individuals have filed their completed disclosure statements with the Office of State Lands and Investments. Board Matter D6 provides a list of the individuals and the status of receipt of their disclosures. We have received the disclosures from all except one individual. Mr. Sackett with the Treasurer's Office and I have followed up with this individual. We received an email yesterday asking us to resend, the disclosure statement. We have done that. We hope to receive that in the next day or so. But in the meantime, we are recommending that the board go ahead and formally acknowledge in the minutes of this meeting that the individuals listed in Board Matter D6, where the table indicates that their disclosure statement has been received by OSLI, that they have satisfied the requirements of Section 3.4 of the Master Investment Policy. And once we receive the outstanding disclosure statement, we will let the board know, and then the board can formally acknowledge that all have been received, hopefully at the next meeting.
Okay, thank you. And I also spoke with the individual yesterday, and I was under the impression he had submitted it last night. But if you haven't got it in your email.
Mr. Chairman, I have not received it. I don't believe Mr. Sackett had received anything either. So
Okay.
I'm sorry to say we have not.
Okay, very good. Well, in that case, I would entertain a motion.
Mr. Chairman,
Yes, Madam Auditor.
I would move the director's recommendation that we make formal acknowledgement in the minutes indicating that the individuals listed in Board Matter D6 have submitted their disclosure statements, and they've been received by the Office of State Lands and Investments and have satisfied the requirements of Section 3.4 of the Master Investment Policy.
The motion's been made. Is there support for the motion?
Second.
It's been seconded by the secretary, not the superintendent. So with that, any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Motion carries.
Mr. Chairman, that brings us to the K matters, which are the Board of Deposits. So I will once again yield the floor to the Treasurer's Office.
Okay, Mr. Chairman.
Mr. Treasurer.
Okay, Mr. Chairman, this is to approve or deny the interest rate on the TDOA program. And our recommendation, Mr. Chairman, is that we go to the floor rate of 0.25%. And hearing some of the Fed chairman's deliberations, within a year, I think maybe we'll be above that. Who knows? Yeah. So, Mr. Chairman, I would say that the state treasurer requests that or move, Mr. Chairman, that the state treasurer requests the board accept his recommendation of the TDOA rate to be established by using the one-year treasury bill average for the full calendar year preceding this meeting, July 1st, 2021 through September 30th, 2021, with a floor of 0.25%. The rate of 0.25% will be for the third quarter of the TDOA contract year, 2021 to 2022, to be effective January 1st, 2022 through March 31st, 2022. And so people out there know that the TDOA stands for the Time Deposit Open Accounts Program.
Thank you, Mr. Treasurer. Is there support for the motion?
Second.
It's been seconded by the auditor. All in favor signify by saying aye.
Aye.
That motion carries. Thank you very much for that. And then, Mr. Treasurer, I see matter K2.
Right, Mr. Chairman, this is the collateral versus deposits on the over short. And that is by institution or bank, and the amount on each one of the collateral market and the bank account balance, and the grand totals, Mr. Chairman, on this is, I'm trying to find the grand total on the over short. That wasn't totaled. The market value is, the difference isn't over total, but the market value of the collateral is 276,258,708.79, and the the amount that was on deposit was 88,451,354.98. So we're in good shape on collateral, Mr. Chairman.
All right, thank you. Thank you very much. And
Mr. Chairman, that concludes the agenda for the State Loan and Investment Board meeting. So if you'll give me a second, we'll transition to the Board of Land Commissioners.
All right, thank you. We are adjourned from the Board of Land Commissioners. Or excuse me, we're adjourned from the State Loan and Investment Board.
Okay.
All brand new, man. Okay. All right. Madam Director,
Okay,
I
Mr.
will note for the record that we have a full quorum.
Perfect. Thank you, Mr. Chairman. The first item on the agenda for the State Board of Land Commissioners today is approval of the October 7th, 2021 State Board of Land Commissioners meeting minutes.
I would entertain a motion to approve the October 7th, 2021 State Board of Land Commissioners minutes.
Mr. Chairman, so moved.
Thank you, Madam Auditor. Is there a second?
Second.
It's been seconded by the Secretary. All in favor signify by saying aye.
Aye.
Matter carries.
Mr. Chairman, we have provided you with the usual reports behind tab B. We do not have anything to add at this point, but we would stand for any questions there might be.
Are there any questions for matters under tab B? Hearing none, please proceed.
Thank you, Mr. Chairman. We have provided the materials for the meeting in advance to each of the board members. We have also briefed each of the board members individually prior to the meeting. At this time, I'm prepared to propose a consent list if the board would so desire.
With no objection from the board, we'll entertain your consent list.
Thank you, Mr. Chairman. The following items appear to be amenable to treatment on a consent list. D1 through D8, E1 through E5, F1 through F4, G1 through G2, I1 through I2.
Okay. Members of the board, I would entertain a motion to include on a proposed consent list items D1 through 8, items E1 through 5, items F1 through 4, items G1 and 2, and items I1 and 2. Is that correct, Madam Director?
That's correct, Mr. Chairman.
I would entertain that motion.
So moved, Mr.
It's
Chairman.
been moved by the auditor. Is there a second?
Second.
It's been seconded by the secretary. Is there any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Thank you for that. I would now entertain a motion to accept the director's recommendations on item D1 through D8, E1 through E5, F1 through F4, G1 and 2, and I1 and 2.
So moved, Mr. Chairman.
That's been moved by the auditor. Is there a second?
Second.
It's been seconded by the secretary. Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Thank you.
Thank you, Mr. Chairman. So that brings us down to the forestry matters. I have State Forester Bill Crapser here. He's included in I3, a report of permit sales, which is informational. And he's also here for D4, which is to give his forestry and fire update. So with that, I would yield the floor to State Forester Crapser.
Thank you, Director. Chairman, members of the board. With the warm, windy, dry weather we've been having, we're still seeing fires around the state on a regular basis. We haven't seen any large ones, and hopefully the weather will change one of these days and we'll be out of fire season. We still have county resources out of state. It's been such an active fire season that I know of. There's 2 or 3 engines still in California from county resources. So we still have people around the country. Our master co-op agreement, which is our 5-year agreement with the federal agencies on how we work with each other on fire, has had lots of fits and starts, but I'm glad to say that it got signed end of last week. So we do have, starting 1st of January, we do have an agreement with the federal agencies to work together on fire. And it does not have a vaccine mandate in the agreement, which was one of the sticking points. The other thing I'd like to talk to you about, I've mentioned before the project we did over in Telephone Canyon, just the other side of the summit with spruce budworm, trying to control that. We're still not positive it was successful, but it was the best thing to do. There is a lot of slash piles over there, and this winter, when conditions are right, we'll be working with DEQ and with YDOT, and we'll be burning a lot of those slash piles in Telephone Canyon. So if you hear calls of smoke and the Telephone Canyon's on fire, hopefully it's just piles that are on fire, not the canyon. Mr. Chairman, the only other thing I have for you, at the last board meeting, you approved a timber sale forest health project out of Cody, the Trail Creek Forest Health Project. Trail Creek Partners, which is a neighboring landowner, had some concerns on it. You directed us to reach out to them to see if there was any way we could work out some of their concerns. My staff sent a letter to them mid-October. They did respond yesterday. My staff's got a meeting with them next week to see what their ideas are and see if we can address some of their concerns. Other than that, Mr. Chairman, I'd answer any questions that you have.
Thank you, Forester Crapser. Are there any questions? Any questions? You're not off the hook yet, sir. Okay. I wanted to give you an opportunity. You and I, the Monday before Thanksgiving, had an opportunity to visit with the South Dakota folks, including the governor and their forester, several of their legislators, a couple of our legislators, really about the state of things that we're seeing in the Black Hills Forest. I wanted to give you an opportunity to just kind of discuss a little bit what the challenges are. And then we also had I think, not entirely satisfactory call with the Secretary of Agriculture the other day. And if you want to I won't put you on the spot. I can take the heavy lifting on that, but I wanted to give you the chance to just opine a little bit on that.
Mr. Chairman, members of the board, the Black Hills, as most of you have known, the Black Hills National Forest has been a little bit immune from a lot of the cutbacks that a lot of the national forests have seen. Part of it is it's been managed very well and it's very productive forest land. There's been a movement the last few years to greatly reduce the timber harvest on the Black Hills. There's a report that was put out by the Rocky Mountain Research Station, General Technical Report, that basically suggested that the timber cut up there should be less than half of what the historical cut is. That would pretty much put the existing sawmill in Wyoming and probably the sawmills in South Dakota at severe jeopardy. The meeting we had was to look at path forward. There's some short-term things to look at. as far as their numbers, their growth, their mortality numbers, I think are questionable. And then they're also in the midst of starting a forest plan revision, and there's discussion of how the states and the counties can work better together to have a forest plan, a meaningful forest plan revision. That all said, I think my own opinion is the trail they're on is going to be a greatly reduced timber harvest on the Black Hills. So we'll continue to work with your office, Governor, and with our neighbors in South Dakota and try to give as much input as we can. I won't characterize our conversation with Secretary Vilsack. I'll let you do that.
I'm happy to thank you, Bill, for that. And obviously, we raised this to the attention of the Secretary of Agriculture and the Chief Forester. There is some dispute over the data under which the General Technical Review, the GTR, was put together. The GTR was put together at the end of the Trump administration, and it's forming somewhat of a basis for the timber reductions. We believe those numbers that was mostly a desktop exercise. We believe those numbers may be inaccurate. So we're going to try to help with South Dakota to sort of more accurately characterize those things. We had some agreement from the Secretary and Chief Forester that they would entertain those notions, but we had no commitment that they would, really move very expeditiously on this. And the timber harvest reductions are perhaps existential to mills in Wyoming and in South Dakota. They've already closed one mill. And I didn't feel that the Secretary showed the appropriate urgency, although I will say that they are entertaining the idea of subsidizing burnt logs from Northern California fires, railing them to these mills as sort of a short-term solution. I just wanted the members of the board to be aware of those circumstances. So, thank you, Bill.
Okay, Mr. Chairman, that brings us to the walk-in matters. We have 5 walk-in matters. They all concern Office of Administrative Hearings recommended findings of fact, conclusions of law, and orders in various sundry cases that Mr. James Castee with the Attorney General's Office has been advising the board on. So with that, I would yield the floor to Mr. Castee.
Welcome, Mr. Castee.
It appears to me that you were each handed a packet reflecting the materials that were published on the website related to the walk-in matters. Each of those packets should include the walk-in board memorandum, which we discussed in advance of this meeting. It's the same, it's just reformatted to be on legal size paper. Attached to that is a draft order for the board's consideration reflecting the recommendation in the walk-in board memo, and that order attaches the recommended findings and conclusions from the Office of Hearings, our Office of Administrative Hearings. That's why it looks so thick. That decision is something that you, of course, have all seen before. So there's really nothing terribly new in that packet. With your permission, I kind of want to go through these one at a time as they are each individual cases, if that works for you, Mr. Chairman.
Mr. Castee, without objection, I think that would be fine.
So beginning with walk-in board matter number 1, as the director indicated, this is an appeal from the director's decision resolving conflicting lease applications by conditionally awarding the lease to the highest bidder. As the board is aware, effective October 26, 2020, the board adopted emergency rules establishing process for leasing vacant land for grazing and agricultural purposes, which largely codified the board's existing long and historic practice with regard to leasing vacant land. While that emergency rule is in effect, in November 2020, the State Lands Office advertised for bids to lease the Mosque Unit 1 at a minimum annual rental of $342.86. 10 applicants submitted bids for Mosque Unit 1. TUF Ranches submitted the highest bid with an annual rental offer of $6,820. 21 Ranch Incorporated submitted the third highest bid with an annual rental offer of $3,233.30. The director conditionally awarded the lease to TUF or Tough Ranches because it was the high bidder. 21 Ranch submitted a timely request for a contested case hearing, and on November 3rd, 2021, the Office of Administrative Hearings issued its recommended findings of fact, conclusions of law, and proposed order granting the Office of State Lands and Investments motion for summary judgment. The hearing officer determined that the director did not abuse her discretion in awarding the lease to the highest bidder for a variety of reasons noted in the decision. Accordingly, the hearing officer recommended that the board grant State Lands motion for summary judgment and uphold the award to lease Mosque Unit 1 to Tough Ranches. Neither party filed exceptions to the hearing officer's recommended decision. The recommendation is for the board to accept the Office of Administrative Hearings recommended decision and issue a final order granting the Office of State Lands and Investments motion for summary judgment, upholding the director's decision and awarding the lease to TUF or Tough Ranches for the reasons stated by the hearing officer.
Thank you, Mr. Casti. Questions from Mr. Casti? Hearing none. Do you want to take these in order? Do you want to?
It seems to me to make the most sense for me to do my spiel, which will
Sure.
get shorter as we go along.
Yeah. Okay.
And vote on each one individually. As I mentioned there, each individual contested case
Right.
matters.
Does that make sense to the board? Absolutely. Proceed.
Mr. Casti, do you know if there are any members of the public that were intending to speak on this?
Not that I'm aware of, nor do the rules generally provide a process for the individuals to address the board on these matters.
Right. So I thought I understood you, Mr. Casti, to say you were going to go through each of the matters and then we would vote individually on them. But you're asking that we vote on them as we review them.
That might make more sense, Mr. Chairman, for just to keep things clear.
Okay,
Whichever
that's
one
fine
makes-
with me. That would be my preference. I thought I must have misunderstood your recommendation. So with that, are there any discussion on this?
Yeah, Mr. Chairman.
Mr. Treasurer.
Yeah, there's just one thing here that I wanted some clarification on, and it's section 8B of the emergency rules about the maximum 120% of fair market value limit. I vaguely remember something about that in some case, but I can't remember the details. And I don't know if you could refresh your memory on that 120%.
Yes, Mr. Chairman, Mr. Treasurer, some of the dissatisfied lease applicants in these 5 appeals raised an issue in front of the Office of Hearing and Appeals, indicating their belief that these should have been handled under Section 8 of the emergency rules, which deals with lease renewals. And in Section 8, of course, it has that 120% maximum provision. But of course, the hearing officer found, and certainly it's true, that these were not lease renewals. These were vacant land leases, which should be handled under Section 6 of the emergency rules, which contains no similar 120% provision.
Yeah, I thought there was some case or something that threw that 120% thing out altogether, but I can't, but maybe there wasn't. Yeah.
Mr. Chairman, Mr. Treasurer, the hearing officer did reject those arguments in these cases.
Okay, thank you.
Thank you, Mr. Treasurer, Mr. Casti. Are there further questions, comments? Discussion, hearing none, I would entertain a motion on walk-in board matter number 1.
Mr. Chairman, I would move the director's recommendation.
You'd accept the Office of Administrative Hearings recommendation decision.
That's it. Sorry.
Thank you, Madam Auditor. Is there a second? Is there a second? There's a second by the superintendent. Thank you, Madam Superintendent. Any discussion? Okay, yes, sir.
Mr. Chairman, I feel that the emergency rules in the area of that one subsection 2, as far as applying the preference was didn't follow the intent of the statute, and for that reason, I'm going to vote no on this particular matter.
Thank you, Mr. Treasurer. So noted. Any further discussion? Hearing none, all in favor signify by saying aye.
Aye.
So I have the treasurer voting no on that, and the remainder voting aye. Walk-in matter number 2, Mr. Castee.
Thank you, Mr. Chairman. This matter relates to Mosque Unit 4. This lease application process occurred on the same time frame and under the same emergency rule as the preceding matter. Mosque Unit 4 was advertised for bid at a minimum annual rental of $2,029.51. 8 applicants submitted bids for Mosque Unit 4. Snook Land and Livestock LLC submitted the highest bid with an annual rental offer of $22,754. 21 Ranch Inc. submitted the second highest bid with an annual rental offer of $19,139.05. The director conditionally awarded the lease to Snook Land and Livestock because it was the high bidder. 21 Ranch requested a contested case hearing, and on October 29th, the Office of Administrative Hearings issued its recommended findings of fact, conclusions of law, and order recommending to grant the Office of State Lands and Investments motion for summary judgment. The hearing officer determined, for the reasons stated in the decision, that the director did not abuse her discretion in awarding the lease to the high bidder, and accordingly, the hearing officer recommended that the board grant the Office of State Lands and Investments motion for summary judgment and uphold the award of the lease to Snook Land and Livestock. Neither party filed exceptions to the hearing officer's recommended decision. The recommendation here is to accept the Office of Administrative Hearings recommended decision and issue a final order granting the Office of State Lands and Investments motion for summary judgment, upholding the director's decision, and awarding the lease to Snook Land and Livestock for the reasons stated by the hearing officer.
Thank you, Mr. Castee. Any discussion, any questions? Hearing none, I'd entertain a motion to accept the Office of Administrative Hearings recommended decision and issue a final order granting OLSI's motion for summary judgment.
So moved, Mr. Chairman.
It's been moved by the auditor. Is there a second?
Second.
It's been seconded by the superintendent. Thank you, Madam Superintendent, Madam Auditor. Any discussion?
Yeah, Mr. Chairman, the same concerns on all of these. This one here is no different than the other one. It's on the emergency rules and that they don't reflect the intent of the statute. And so I feel that I just can't vote for this one, Mr. Chairman. So I vote no.
Thank you, Mr. Treasurer. Any further discussion? Hearing none, all in favor signify by saying aye.
Aye.
Nays? Record actually the treasurer's no on that, and the rest of us is ayes. Thank you. That motion carries. Next matter, which is walk-in board matter number 3.
Thank you, Mr. Chairman. This walk-in board matter number 3 relates to Mosque Unit 6. It is very similar to the preceding walk-in matters. Unit 6 was offered during the same time period for a minimum annual rental of $619.36. The Martinez's submitted the highest bid with an annual rental offer of $1,274.56. Medicine Lake Ranch submitted the second lowest, not second highest, but second lowest bid with an annual rental offer of $650. The director conditionally awarded the lease to the Martinez's because they were the high bidders. Medicine Lake Ranch timely requested a contested case hearing, and on September 20th, 2021, the Office of Administrative Hearings issued its recommended findings of fact, conclusions of law and order, recommending granting the state's motion for summary judgment. The hearing officer recommended in this recommended decision that the board grant the Office of State Lands and Investments motion for summary judgment and uphold the award of the lease to the Martinez's. Neither party filed exceptions to the hearing officer's recommended decision. The recommendation here is to accept the Office of Administrative Hearings recommended decision and issue a final order granting the Office of State Lands and Investments motion for summary judgment, upholding the director's decision and awarding the lease to the Martinez's for the reasons stated by the hearing officer.
Thank you, Mr. Casti. Noting the treasurer's, continuing objection to the matter and using the same language, Mr. Treasurer, I would entertain a motion to accept the Office of Administrative Hearing, et cetera.
So moved, Mr. Chairman.
Moved by the auditor. Is there a second? Seconded by the superintendent. Thank you.
Mr. Chairman?
Yes.
May I modify that objection just slightly?
Absolutely.
For the basis of me saying that it's not consistent with the intent of the statute was I was on the Ag Committee at the time this statute was written and serving in the state legislature. So I have a perspective that necessarily the hearing officer did not have. And so that is actually the firsthand basis for this dissent, Mr. Chairman.
Thank you, Mr. Treasurer. So noted. Any further discussion? If not, I will move to a vote. All in favor signify by saying aye.
Aye.
That motion carries in the same fashion with the treasurer dissenting. Walk-in matter number 4.
Thank you, Mr. Chairman. This matter relates to Mosque Unit 5, same circumstances as before. This Mosque Unit 5 was offered at a minimum annual rental of $1,548.40. 5 applicants submitted bids. Antlers Angus Ranch submitted the highest bid with an annual rental of $9,940. Sblc Enterprises submitted the second highest bid with an annual rental offer of $8,400. The director conditionally awarded the lease to Antlers Angus Ranch because it was the high bidder. Sblc Enterprises requested a contested case hearing, and on October 22nd, 2021, the Office of Administrative Hearings issued similar recommended findings of fact, conclusions of law, and a proposed order granting the Office of State Lands and Investments motion for summary judgment. Finding that the director did not abuse her discretion in awarding the lease to the high bidder and recommending that the board grant OSLI's motion for summary judgment and uphold the award of the lease to Antlers Angus Ranch. Again, the recommendation is to accept the Office of Administrative Hearings recommended decision and issue a final order granting the Office of State Lands and Investments motion for summary judgment, upholding the director's decision and awarding the lease to Antlers Angus Ranch for the reasons stated by the hearing officer.
Thank you, Mr. Casti. Any discussion? Mr. Treasurer will note the same modified comments. Go ahead.
Yes, and Mr. Chairman, and if it's possible, I'd like to put that statement as a matter within the minutes to make sure that's in there.
Yeah, and so noted. Thank you. And I would presume that's for each of these matters.
Yes.
Thank you. So with that, I'd entertain a motion to accept the Office of Administrative Hearings recommended decision and so on.
So moved, Mr. Chairman.
Thank you, Madam Auditor. It's been moved. It's still seconded by the superintendent. Thank you both. All in favor signify by saying aye.
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 Mr. Treasurer, I'll give you the chance. The last time I forgot to ask for an A, but I'm going to give you the opportunity to say nay. So
Nay.
thank you. All right. Yeah, go ahead. We're done with that. Do you want to add? Yes, go ahead.
Thank you.
We do have one more.
Oh, you have one more. I'll wait till the end.
Okay, thank you, Mr. Secretary. So with that, walk-in matter number 5, Mr. Casti.
Mr. Chairman, walk-in matter number 5 relates to Mosque Unit 3. Essentially the same circumstances as the other walk-in matters. Mosque Unit 3 was advertised at a minimum annual rental of $71.89. 5 applicants submitted bids. Antlers Angus Ranch LLC submitted the highest bid with an annual rental offer of $461.50. Victor Jones submitted the second highest bid with an annual rental offer of $240. The director conditionally awarded the lease to Antlers Angus Ranch because it was the high bidder. Victor Jones timely requested a contested case hearing, and unlike the other walk-in board matters, this matter was not decided on summary judgment below, but it actually went to a contested case hearing. So on November 12th, 2021, the Office of Administrative Hearings issued recommended findings of fact, conclusions of law, and an order, and they're slightly different than the preceding matter because it's not on summary judgment, but after a hearing. So nevertheless, the office or the hearing officer determined that the director did not abuse her discretion in awarding the lease to the highest bidder, and recommended that the board uphold the award of the lease to Antlers Angus Ranch. Neither party filed exceptions to the hearing officer's recommended decision. The recommendation is to accept the Office of Administrative Hearings recommended decision and issue a final order upholding the director's decision and awarding the lease to Antlers Angus Ranch for the reasons stated by the hearing officer. And I would note that in the packet of materials that you were provided related to this, there is a slight typographical error related to the different procedural posture of this case. I have fixed it and I'll substitute it. If you look at the draft proposed findings and conclusions that follow along with the recommended decision of the Office of Administrative Hearings, like the other orders on page 2 within the order of the board, the other orders said grant the Office of State Lands and Investments motion for summary judgment, because that's the procedural posture it was in. This one should have said and will say it's ordered that the director's decision awarding the lease for Mosque Unit 3 to Antlers Angus Ranch is upheld for the reasons stated by the hearing officer. And like I say, the difference in language between this and the other orders is to reflect that this actually went to a contested case hearing. And I apologize for the mistake in the earlier draft.
Thank you, Mr. Casti. Mr. Treasurer, any further comment?
Not particularly on this, but on the whole process.
Okay, thank you. But I know that you probably want to register some. Yep, same comments. Any other comments? Okay, hearing none, I would accept a A motion?
Mr. Chairman, I would move that the board accept OAH's recommended decision and issue a final order upholding the director's decision and awarding the lease to Antlers Angus Ranch for the reasons stated by the hearing officer.
Thank you, Madam Auditor. That's been seconded by the superintendent. Thank you. Any further discussion? Hearing none, all in favor signify by saying aye or thumbs up.
Aye.
And a nay? That motion carries 4-1 with the treasurer dissenting. I think that takes care of all of our matters. Mr. Secretary, I'll recognize you first for a comment.
Thank you, Mr. Chairman. I just wanted to state on the record that I think that the rules that we finally adopted reflect, at least the way I tend to interpret the statute, and I think we got to the right place. Having said that, I also have great respect for the rule of law and the process under which the office considered these bids, and also the appeal process that the unsuccessful applicants undertook, and respect the decisions, whether they be under summary judgment or the contested case hearing. And also note, even though it's a financial, at a financial cost, after our decision today, this matter is now ripe for appeal if the unsuccessful applicants wish to appeal to a higher appellate level. But my vote today reflects a respect for the rule of law. I voted for the emergency rules. Those were the rules we were operating under. I certainly respect differing viewpoints on those emergency rules and a lot of the heartburn that this decision has caused. But that's why I voted the way I did today. Thank you.
Thank you, Mr. Secretary. Mr. Treasurer.
Yeah, Mr. Chairman, this is kind of not necessarily specific to this, but the government appeal process in general. And noted in a lot of the communications is that people frankly just ran out of money. So they really don't have access to the courts. It's not a fair and equal process. And there's always deference to the agency, whether it's this agency or any other agency in the appeal process, because they're essentially the subject matter experts, and the courts, whether it's a judge or whether it's a hearing officer, often give a higher weight to the agencies because of their subject matter expertise. And the cost to actually develop expertise and the cost of defending your point of view, or in many cases your rights, is extraordinary on one side, and it's absolutely free on the other side to the parties, because the state steps in and represents their point of view, basically free gratis because they're riding the coattails of the state. And so it's a situation, the process that I hope at some point in time that we can try to level out and equal the access to the court system because of the extraordinary cost of the legal system. It's really unbalanced right now. It's balanced in favor of the government to an extreme extent, I think. And so at some point in time, it would be interesting to see what how we could possibly modify that to give a little bit more equal access to justice. Just as a side note, not necessarily this particular case, but I see it from practically in everything that's appealed that the government does, that the citizenry are at a distinct disadvantage.
Thank you, Mr. Treasurer. Madam Superintendent, are there any comments?
Thank you, Mr. Chairman, and I appreciate the comments made by both of my colleagues and agree with both of them on lots of different levels. I just wanted to comment that I cast my vote today more in line with the comments made by the secretary, certainly, and just would say that the promulgation, the deliberative process that it takes to get to the rules that we finally arrived at was thoughtful, and it was driven by by us largely. And so while the direct access, I can appreciate the treasurer's comment about direct access to the courts and the appeal process, but at the same time, making sure that alignment and balance between statute and rule and practice and process is always a part of what we do and what we check ourselves on. And so some of that process takes place sort of, I guess, behind the curtains, but on behalf of those who appeal, in hopes that the appeal process doesn't have to be engaged as often. And so, I just want to thank my colleagues and the staff for the careful deliberation on the rules that brought us to where we are. And I'm grateful going forward that we do have better alignment. Thank you, Mr. Chairman.
Thank you, Madam Superintendent. Madam Auditor, any comments? Mr. Casti, any final comments?
No, Mr. Chairman, thank you.
Thank you. Madam Director.
No comments from me, Mr. Chairman. I think that brings us to the end unless you have comments.
All right. Well, thank you all for that. And I would concur that I think the work this board did in trying to, I guess, further refine the rules was good work and seems to be a better product. So with that, I would entertain a motion to adjourn.
Mr. Chairman, I move we adjourn.
Thank you, Mr. Treasurer.
Second.
It's been seconded. I thought you all were gonna give me up till 3. All in favor signify by saying aye.
Aye.
I think that means that we are adjourned. Thank you.